Let's take a look at the sector action here, and we have materials in the pole position, followed by financials, energy and tech, each of those up more than 1%, and consumer discretionary, healthcare, and communication services are in the red right now. Want to show you a picture of the Nasdaq 100. SpaceX is not a part of it just yet. They should be joining the Nasdaq 100 in about 15 days. But here's what we're seeing right now. We're seeing a little bit of pressure with the mega caps, although you can see Alphabet up 1%. Amazon is down 2%. Let me show you the semiconductor trade because we've seen some weakness this week, not necessarily today, but we have seen weakness. And there's been speculation that SpaceX has been drawing money away, at least on the retail side, from some of these heavy chip trades. But here you see AMD up 6%, Intel up 7%. And let's get to our space heat map here. And you're going to see, look at how big SpaceX is. It takes up almost the whole thing. I'm going to show you the equal weighted version, and you can see, well, what stands out here? Most of these other names are in the red, including Virgin Galactic, which was having a nice pop yesterday, but is now down 30%. Net down 13% over the last 2 days. If anything is getting crowded out here today, it is probably a lot of those other space stocks. But I do want to get our discussion started here with Brooke DePalma. You have been live down at the Nasdaq all day long. Tell us what the buzz is there.
Jared, well, the excitement has certainly died down a bit. I mean, this morning, walking into the Nasdaq, there was hundreds of people gathering outside in hopes to potentially get a glimpse of Elon Musk, who ended up being at the SpaceX headquarters at Starbase, Texas. And so there was no Elon Musk physically here, but his mother, May Musk, was here. You also had the COO of the company ringing the opening bell behind me. And the excitement just throughout the day has kept going, especially now as you see this IPO price hovering around $170. There's this feeling, this energy that, okay, not only did it go above that 135 IPO price, not only did it go above that 150, but it's now hovering around 170. And so moving into the close, the momentum's still there, but we're talking about hundreds of people who are inside the Nasdaq alone this morning. And it seems like that party's either happening upstairs, Jared, or it's tapered off a bit.
All right. Well, I want to talk to the rest of our panel here. Praz, let's get you to weigh in. I know you've been writing a little bit about this. We just talked about Musk becoming the first trillionaire, but what are some of the dynamics that are really catching your attention here on day one after that nice pop?
You know, actually, Jared, in the morning, you and I are talking about this for weeks now, about where is it going to price, what's it going to do?
Yes.
And we were talking about, oversubscription. 4 times oversubscribed.
Seemed low by historical standards.
Well, talking to you about that, because you've been following this very closely for years, and you're saying, hey, that's actually not that much. So then how did that reflect in today's price? I'm not saying that's the main thing, but today we saw the pricing was initially in the 170s, and then it started coming down, indicating lower, 167, 165, 162. Yes. Got all the way down to 150, and that's where it actually opened. And I thought to myself, that's not necessarily a good thing. It seems like demand wasn't as high as people thought. But then here we are sitting right now, and stocks up nearly 30% to 170-ish or thereabouts. So clearly maybe the pricing was good discovery there. Mm-hmm. I think a 20% pop or above is a good day for them, right? It means you've essentially caught enough of that demand.
Yeah, you don't want to leave too much on the table. You want a nice press. You want a nice pop, so the press can report that, et cetera.
Exactly.
You know what was also really interesting to me was the time that it opened, 11:46 a.m. Now this is a huge IPO, and a lot of the historical ones have taken until 1, sometimes as late as 1:45 p.m. Jake, I'll get your comments there.
Yeah, 11:45, really, really early. Now, as Pras was saying, we're up about 30%. That is much more the situation you want than what we saw with Figma or Circle, where they opened later, had these massive, massive pops. But it was a bit weird for us to see the first trade at 11:45, 11:46, somewhere in there. I know Brooke was at the Nasdaq listening to Nasdaq CEO Adena Friedman talking just about the excitement of the place. This is a big day for the Nasdaq as well as SpaceX, winning this listing, getting to have this company on their book, getting to run this IPO. That's a big deal for them too. It seems like the early timing comes just from the raw excitement, right?
Yeah.
The banks wanted to get this trade started. The Nasdaq wanted to get this trade started. Again, we saw this price at 150, so much lower than where we started the morning indicating, but we are now up 30%. So all seems to be going okay.
Well, we got somebody on the floor right now, so let's go to Brooke DePalma and get your reaction. We were just talking about that 11:46 a.m. print. Was there any surprise that it came that earlier? What was the general mood down there?
Heading into today, Jared, there was a feeling that because of the size of this IPO, the world's largest IPO, now above $2 trillion market cap, sizing up against the likes of Meta, even more than Elon Musk's other company, Tesla. I mean, this is insane amount of capital raised today here at the Nasdaq. Moving into this day, what we were sort of getting the sense of was that this was going to take a little bit longer because of the size and the sheer volume of this. Actually, Robinhood spokesperson confirming to Yahoo Finance that they saw record-breaking trading activity today on their platform, given this IPO. So heading into this, there was like this feeling that it was going to take much longer. But I feel like Nasdaq sort of using this as a win. I mean, we heard from Nasdaq President Nelson Griggs that this just goes to show the technology that the Nasdaq has in order to work between the bankers and the buyers and the sellers and ultimately come to that debut at 11:45. Keep in mind, the first quote was like 9:50. And so this was really, shortly after 2 hours after the opening bell, right before noon. Pretty quick indeed, and now to see that momentum continue as we make our way towards the close, I would call this a very successful IPO, not only for SpaceX, but also for the Nasdaq when you have OpenAI and Anthropic in the pipeline as well.
Yeah, let's also
go for it.
Let's also point out here, SpaceX is now the 6th largest company by market cap, only behind, let's go from the top, NVIDIA, Alphabet, Apple, and Microsoft, and Amazon. And then we have SpaceX. On day one of trading, this is the 6th largest company by market cap, pushing Meta actually out of the top 10 to the 11th spot, pushing down the list Taiwan Semiconductor, pushing down Broadcom, pushing down Saudi Aramco, which held the record before today for the largest IPO back in 2019. So immediately, not only is SpaceX having a good day with the IPO, this is now one of the largest companies in the world right away. Once we get it listed in some of these exchanges, once these passive funds start buying, the company's going to have more power behind it. It just goes to show you how big of a day this really is for the market.
Yeah, just a quick comment there on the technology. You were talking about the NASDAQ. I would call this a win for the NASDAQ because I heard a lot of traders whispering, well, remember what happened with Facebook, which is now Meta, back in the day, I think it was 2012. It was called the face plant offering, and that's because there were all kinds of technical glitches on day one. But I think a broader point here is that when there is a new issue and there's a lot of excitement about it, you don't necessarily need to rush in on day one. A lot of times these things pull back. A statistic I like to cite is that 91% of IPOs actually cut under their day one lows within a certain amount of time. Now, usually that's 3 weeks to 3 months, and I think it's even higher if you go out a year or two. So the point is, there's a lot of excitement now, and yes, it's a win for the NASDAQ, but the SpaceX itself is going to be added to the queues. That's the NASDAQ 100 index in about 15 days. The rules had to be changed in order for that to happen, and that just kind of tells you how big this is. I'd like to go to the Wi-Fi Interactive right now if we could, and we have our mega caps heat map up here. And you can see SpaceX up in the right. Jake was just talking about this being the 6th biggest company now, and we don't have Saudi Aramco in here, but this gives you a flavor of what's going on, and you'll notice how big that pop is versus some of the returns that we're seeing in a lot of these other mega caps. So a big question in investors' minds is, given the size of this IPO, given the fact that we have 2 more coming down the pike, is this going to be a market event where, well, I don't want to say top tick, but that has been the whisper. And Praz, you have some thoughts here?
Well, I mean, just looking at the chart today, SpaceX hit 178 at one point, right?
Yes.
And it's come down a bit from there. So just to, I've spoken to someone earlier today about how if we thought Tesla was volatile, this stock is going to have that in spades for a while now, I think, Jared, because of that thin float. People coming in, you have the
Let's
ETFs
talk about that
coming
thin
in.
float for a second. Explain that for the viewers.
So basically, even though it's a $75 billion fundraise essentially here, capital raise here, or stock raise, what do you want to call it, equity raise, it's only 4.2% of the overall float of SpaceX. So I think it's 555 shares.
That's what's available to the public.
Right,
and
right.
typically with an IPO, you might see a larger allocation. And there's another instance where the rules had to be changed to accommodate this IPO. But given the size, if you had a 20 or 30% float, that would just be maybe an obscene amount of money.
Well, the total float of SpaceX is something like 4 billion shares. So that's,
that's
a lot of shares. It's a lot of shares.
So that's why we're sort of seeing, So with the smaller float, you have a bit more kind of just sort of stock movements that can be a bit more exaggerated because there's just so few shares out there to be traded, whether bought or sold. So that's why you're seeing a lot of big movements here, and that could be the case for a few weeks now until we see more quantity.
Ross, to your point on the volatility we're probably going to be seeing, our own Julie Hyman, who anchors our morning show, did a poll on Twitter today, on X today, asking when people think SpaceX shares will fall below $135, below that IPO pricing point. 44.7% of respondents within 90 days. It's the most popular option. We've got 20% of people saying never. We've got 21% saying today. But it just goes to show you, we are probably going to be seeing this volatility. That's what people are looking for. They are expecting this stock to swing around. Whether it goes below 135, impossible to tell right now where that's going to go, but you certainly see people saying this is going to swing. As Jared was pointing out, you often see IPO stocks pull back in those first 90, first 60, first 6 months, really. So how far is this going to pull back? Impossible to say, but you certainly see investors looking at it.
We also potentially have Q2 earnings coming out probably before the end of July. That'll be a big event.
We're going to be sitting right here for that one.
Big event for two reasons, right? They're probably going to report another loss. It's going to be accelerating because of AI, who knows? I believe, depending on how the stock or how the company does, it'll unlock more insider selling if the stock, if the company's doing well. Right. So you have more flow coming on. So it's a lot to watch in the next 6 weeks, even surprisingly, with this company that already has so many eyes on it. I'm looking at volume there, Jared. What, 200-something million shares already traded? 300 million shares already being traded in what? 3-4 hours?
Well, I mean, the first print was 56 million shares, and I don't have the comps on that, but like I said, $8.4 billion in one trade, and that wasn't even the first minute. So there's a lot of precedents being set here. The fact that we were able to IPO at all, and this came out early, I think is a big win for the Nasdaq. But let's talk about some of the investor implications, because I've been writing about all the leverage ETFs that are coming out. So there's a dozen literally, and some were ready today, but it looks like they got pushed back to next week, probably going to open Monday. So if you wanted to take a 2x bet or a downside bet on SpaceX, maybe downside 2x, you could be able to do that too. But that's not here right now. Then we have the options. Options are going to be opening up, I believe, next week. Don't quote me on that. But there has been some more hand-wringing about rule changes there too. So a lot of what's being done right now is unprecedented due to the size of this, but so far, so good. I mean, we haven't really seen any market-wide disruptions. The orderly open on SpaceX seems to be trading within a reasonable volatility here. Brooke, I'll bring you back in here. Anything you're seeing on the floor?
Yeah, well, I think that some of the things that I'm hearing from people I've been speaking to throughout the day and things that I'm seeing get sent through my inbox today is just the fact that they actually didn't get all the allocation that they had wanted heading into this IPO. The amount of allocation that people specifically submitted for ended up only being 10, 15, 20% of what they actually ended up getting at the end of the day. And I think this just goes to show the sheer demand that this IPO had, even this morning and into yesterday. I mean, people are calling this is crazy, this is insane, this is truly historic in that own sense. And also when you think about the retail investor aspect of this, we talked about this many times, but 30% of that was supposed to be allocated to retail investors. It seems like because of the sheer institutional demand that we ended up seeing, that ended up being a bit lower, perhaps 20% or less. But yet you still have so many retail investors trying to get a piece of this pie, and that led to Robinhood seeing its record-breaking day of trading activity. And so there's just so many different implications. I mean, even when you think about the fact that this is not Elon Musk's only company, I do want to quickly point out to Tesla because it's rebounding a bit. It was down upon the initial IPO offer, and now it's up about 1%. And so there was some speculation. Are people or retail traders pulling out of Tesla in order to invest in SpaceX? And it seems like maybe either people bought the dip on Tesla or that wasn't the case. Maybe they even heard our reporting that Tesla does have a stake within SpaceX. And so there's just so many different back doors into this IPO, to your point, Jared.
Yeah, if we could go to the Interactive real quickly, I just want to pull up Tesla shares, and you can see, I'm going to mark on the chart when the SpaceX IPO finally opened, and I don't know if I drew that well, but that was about 145, and then you saw Tesla take a nice little dip there, but that was the low of the day, and from there it took off. not to use too good of a metaphor, but it took off like a rocket. And you can see it's up 1% now. And in context to the other mega caps that we're seeing on the screen here, Alphabet's up 1%, but not a whole lot of action going on elsewhere. So another point I want to bring up is Elon Musk is now a trillionaire. And we have never seen this in the modern era. If you adjust for inflation, I think you could argue that maybe Rockefeller, some of the guys back in the day and the robber barons might have reached that plateau, but this is the first time we've seen this in the modern era. And I know, Praz, you've been taking a look at that.
Yeah, we've been following this for a while because, obviously on paper, Musk's sort of holdings with SpaceX have been shooting up tremendously over the past few months. Whereas Tesla, like you mentioned, sort of just wavering there a little bit. But look at the numbers. He did cross that trillionaire mark for any person to do that on paper, right? So his holdings in SpaceX, 42% or thereabouts of the SpaceX equity. Now he does have 82% of the voting because of the dual class nature. But of that stock, I did the calculations earlier today when stock was 158. That was around $870 billion. So now it's probably like 890, maybe give or take, given the higher shares here. You add that to his Tesla stake, which is around 280 billion bucks. You're at 1.15 trillion dollars in net worth for Elon Musk.
Not bad for a day's work.
Yeah, not bad.
I saw a stat that showed he was a millionaire at age 27, billionaire at age 41, and now trillionaire at age 54. So it's just an unbelievable.
All right, so by the time he's 70, he'll be a quadrillionaire. That's the way it goes. You just add a zero. It's like AI.
Pras, you pointing out to me on the desk a few days ago, we were talking about this could at some point just be one pot of money for him, right? Looking at a possible merger between Tesla and SpaceX. Obviously, the implication
with Tesla
there.
being the smaller company,
right,
which
with
is
Tesla
amazing.
being the smaller company, the implication there is that
the target,
Musk would then have control of both entities at that much higher share of the voting power. I know it's something you've been watching really closely.
Yeah, we've been talking about, the story being, is this good for shareholders? That's one thing. But in this case, Musk has mused about merging the two companies. There's been reporting on that. He's been talking internally about that. And it kind of makes sense from his point of view because with SpaceX, he has so much control over how that company operates and what they can do. If he's able to subsume Tesla, where he's had some issues getting the things he wants done because of just his shareholding of the company, the saga of his compensation was unending with trials lasting for years, things like that. If he can subsume Tesla, and then he would argue, right? Well, these companies are already working together as is. They're already working together on stuff like chips and the data center stuff. They're already doing some stuff together. SpaceX is the biggest buyer of trucks last year, so that's why he wants. That would make sense from a synergy.
They share staff, engineers go back and forth. There's a lot of synergy.
I mean, if you open up the SpaceX prospectus, which is beautiful because it has so many nice pictures in it, I do appreciate that. Something like over 90% of the opportunity, the way Elon Musk sees it, is in AI. This is an AI-focused company, and I think we really need to think about that because building data centers in space, that could be the next leg of this AI trade. And I think that's the multiple. When you talk Elon Musk, it's always about the multiple because he's a visionary. He's thinking very far into the future. And ultimately, you want to see that reflected in the share price. Now, Tesla used to have that going for it, used to have a much higher multiple, but that's kind of come off in recent years. And I'd also bring up the precedent that this would be a second major merger for Tesla because, was it Solar City back then? It was Solar.
Right.
Well, another Musk company.
Yes. So he merged with the solar company. That actually got quite a bit of flack. It was litigated to a degree, but ultimately, in hindsight, it's just a done deal. It's no big deal. And maybe that's the way we're looking at this event in 10 years. Okay, this was the year that SpaceX became public and also joined with Tesla. Maybe that's the next leg here, and maybe SpaceX actually becomes bigger than Apple, bigger than NVIDIA, some of these picks and shovels companies.
He already merged it with XAI earlier this year, making that entity bigger. That's where you get that 90% of the total addressable market estimate for AI, not for the rocketry, not for the telecoms, but for the AI market. Now, obviously, all of that's going to play in the orbital data center ideas. This is all part of one bigger play, but it is interesting that these companies could become one.
And that's what Oppenheimer is really excited about, right? So they had a note yesterday giving SpaceX a 190 price target. Not too far off. And a big part of that was the AI bet, and that includes orbital data centers, right? They think that that's a possibility. But they also noted that there's a backup in the sense that SpaceX XAI is already doing terrestrial data centers, right? They're already doing that. Now, it's not obviously this glamorous business, but they've already proven they can do that. So if you can keep that going as your backup and try to, maybe it takes longer to get the orbital data center stuff up going, 'cause that's a lot of payload you got to launch up there, numerous satellites connected together, creating, it takes several satellites to make one data center on Earth, right? So it's just a bigger endeavor. So maybe there's more technological advances that happen in the future where you can have more sort of throughput at each per satellite or whatever you want to call it. So that's what Oppenheimer's sort of bullish on. And it's not, you're right, it's not because of so-called the rocket business, which is important. Starship needs to happen. That's part of the orbital data center story. And of course, you already have Starlink, which is doing quite well. They still see that growing. It's a pretty top tier product. They're going to keep growing that business, although the RPU, or the average revenue per user, is coming down because they're cutting prices to get more people on board. So that's a little headwind there. But yeah, it's all about that AI bet, and that's sort of what the bulls are sort of clamoring into. But also the bears are seeing that and saying, hey, this is way, way, way uncertain, right?
I want to bring Brooke Brack in here because you just shared a link with them. I'm looking at this Polymarket event market right now. Will SpaceX's valuation hit blank by June 30th? And Brooke, you're looking at some of the numbers there. Some of these are jaw-dropping. What are you seeing?
Yeah, I mean, to see the way that this has sort of flowed and changed over the course of this day has been interesting as well, because we were expecting this to be a company that would open at $1.77 trillion, as we're all sort of discussing here. But now Polymarket users are saying that they expect that by June 30th, the odds of it being even more, which is sort of goes to show that they think that this stock price will continue to run up as we make our way towards the end of this month. They say that 96% think that it will be 2.25 trillion, so around where it is now. Then you have 50% saying that it will reach $2.5 trillion. And then you have 100% or a few people saying that it'll go down to 2 trillion alone. And so I think it'll just be interesting to see how over the course of this month, as Pras was saying, that there sort of is this larger narrative that bears are playing into about AI spending and this circular economy, and how these are all sort of playing into each other, even with Anthropic in the picture too, which works with SpaceX. But yet you have such bullishness that this company, this stock price, will continue to trend higher as we make our way towards the end of the year. And you guys were talking about Elon Musk sort of being like a visionary and how he plays into all these different parts.
Sure.
Can we quickly mention about the fact that he got his wealth originally from PayPal? It's so crazy
back
to think
in the day.
of that trajectory.
All right, don't go anywhere. Jake Prosbrook, we got more Yahoo Finance coverage on SpaceX's first trading day up ahead. We are back here digging into the SpaceX IPO. We got Jay Conley, Subramanian, and Brooke DePalma over at the Nasdaq, all with me. Plus, we're going to be adding another voice, Caleb Silver, Investopedia's editor-in-chief. And for Caleb, you're down at the New York Stock Exchange, it looks like. Tell me what the view is down there. What are you seeing?
All the activity up in Midtown today, but still a market that's in the green and gaining some momentum. A lot of that is based on that news. So up down here, you hear a lot of traders talking about the news flow, especially what's happening with the Iran conversations. That's pretty much front and center here, but everyone's got their eye on the IPO out of the corner of their eyes here, and watching it go up 25-30% on a day where you have mostly green arrows. That's a pretty good sign. Way to go out on a Friday here, especially a hot one.
Yeah, well, I want to dig into some of the technicals here on AlphaSpace. So if we can bring that up real quickly, and then I got another question for you, Caleb, but stick with us here. So this is our AlphaSpace workshop on SpaceX, and I'm going to maximize this chart here. You can see this is the chart of SpaceX today. At 11:45, we got that first print. Like I said, it was 56 million shares, so $8.4 billion worth traded on that opening print. And you can see it's been up mostly since then. Now, lots of zigs and zags there. It looks like we reached a peak of around 176 and change. But let me broaden out here because I got something that's really interesting I wanted to show you. The space economy, I have a heat map here, and you can see how big SpaceX is in regards to everything else. And in fact, it's just kind of blowing everything else away. But what you will notice on the right side of your screen there is most of these other space stocks are red right now. IoT is an exception. And I'm not doing the traditional aerospace stocks like Boeing and Lockheed Martin. These are part of the new space economy like Rocket Lab. So the bottom line is SpaceX, there has been concerns that SpaceX is kind of drawing away money. And Caleb from the broader market, and Caleb, I guess this next question is for you. You closely watch what goes on in the market on a day-to-day basis. Are you hearing any concerns? Do you have any personal concerns that SpaceX is just so big, it might be pulling money out of the rest of the market?
Yeah, well, I think some retail traders have jumped on this IPO and they've been waiting a very long time to do it. I think most investors have been waiting and they know they're going to end up owning it anyway through some sort of index fund or through some sort of an ETF proxy. But I've been keeping my eyes on the space ETFs, the XOVR and the NASA ETF, the RONB and the ARC space ETF. Those were very strong coming into the week. Not so strong today because a lot of the air is being sucked out of the room or the galaxy, whatever you want to call it, by a big IPO. When I look at big stocks like Apple and others that have been selling off this week, I think that's not really about, I got to sell Apple so I can buy SpaceX. I think it's a lack of enthusiasm about what investors might have heard at WWDC and the fact that there are companies like SpaceX, OpenAI, and Anthropic coming to the market. That's about $4 trillion in new stock, plus all the new stock that existing companies are issuing. That's a lot for investors to take on here. So they're going to have to make room for SpaceX in their portfolio and OpenAI and Anthropic if they want it.
It's easy to say, well, SpaceX is really big and maybe it's sucking money away, but I do have some hard stats from Vanda Research. I got their latest note this morning, and you can see the results up on the Yahoo Finance site. I was writing about it, and their theory is there's been money that's kind of been sucked out of the chip trade to make room for SpaceX. And one of the trends they're noticing in 2026 that's different from 2025 is in 2025, we had some moments, quite a few moments when it was like buy everything. And there was a lot of enthusiasm and investors were not as discriminating. In 2026, investors are, if they want to be in something new, maybe like SpaceX, well, they're taking that money from elsewhere. So there's a little bit more selection going on. And I just want to get your insights, Caleb, on if you're seeing anything like that.
Yeah, there absolutely is. And I think when you think about the returns that investors have generated sitting on FANG stocks or sitting on the Mag 7, Mag 8, whatever you want to call it, they've made a lot of money over the year. So time to lighten up in some cases, but also time for something new. And investors are always looking for the next shiny thing. We know that, but there's not going to be room for all of these companies to be winners here. SpaceX, obviously an early leader, even though it's a money-losing company, the dream to address this $24 trillion addressable market is a pretty big one. And for those Musk fans, and there's a lot of them out there that have made a lot of money investing with him over the years, they're willing to take the bet here. And that if that means moving money out of a traditional FANG stock or a Mag 7 player, a Mag 10 player, they'll do it, especially when you start to see sales and margins start to compress a little bit. And when you look at Apple and you look at the threats facing some of the software companies, the bigger software companies, those are very real. But when you think about the profit potential for an OpenAI, for an Anthropic potentially, and then a SpaceX, if it can pull all of this together and merge xAI in and merge Tesla in over the next few years, that's where the profit and the growth is going to be. So I think investors will definitely be moving more money out of the old stocks that got them here into the stocks they think are going to take them there.
Speaking of shiny things, I want to go back to you, Brooke. You're down there at the Nasdaq, and you were around when we had that opening trade at 11:45 a.m. We talked about that a little bit, but what's been the mood like this afternoon? Have things quieted down? Is security still tight there? I guess, what's the vibe?
Yeah, Jared, security definitely still tight. We did see the NYPD sort of leave the surrounding areas for the most part of the Nasdaq this morning. There was about hundreds of people who did flock in hopes to see Elon Musk. Since those crowds have disbanded, but you do see a lot of tourists who may be in town for the FIFA World Cup. They're asking all the different news outlets who are outside of the Nasdaq what exactly is going on and what's all this hubbub about. So there definitely is still this sense, this feeling that there is excitement hovering around the space. There also is an uptick in security presence. Typically, on a typical day, you'd seen a handful of security guards. Today, I would say that there was dozens this morning, and now there still is a large presence here at the Nasdaq, given that many executives likely are still upstairs as they sort of wait to see how this plays out into the close. And we were chatting a lot about sort of the momentum, the moment that this is for the Nasdaq. And just to put this in sort of context, we know that today SpaceX raised about $75 billion. And so far, as of yesterday, the Nasdaq did see 38 IPOs, and altogether, those raised $23 billion. And so when you think about the gravity and the weight of this IPO, we saw every single Nasdaq executive here today. They are certainly extremely happy that they got this debut.
Caleb, you bring up the OpenAI IPO we think we're going to see, the Anthropic IPO we're likely going to see coming after SpaceX. I wonder what you're hearing about how much appetite there is for all of these massive IPOs back to back to back. It feels like to me there might be a little bit of tiredness, of restlessness from investors saying, how big does this get? Where do we pull money from to put into these stocks? What are you hearing about the appetite for these three major IPOs coming in really quick succession?
Yeah, well, for retail investors, there's going to be those that are always interested in something new. But we know institutional investors are all over this. They're in it on the private markets, and they're waiting to get it and cash out in the public market. So there's going to be appetite there, and there's going to be buying support for all of these stocks because they are backed by the world's biggest companies, the world's biggest hedge funds, the world's biggest private investment funds. If you think about the Saudi investment in a lot of these companies, there will always be a floor under these stocks, at least for now. And while they come out, they're going to be big, flashy IPOs, and investors are going to bid them up just like they bid up SpaceX today. The question is, how much durability and staying power do they have? And when you look at sort of the 10 to 15 biggest IPOs of the last 15 or so years, a lot of them do pop on day one. Not a lot of them are still higher 3 months from now. And I think that's going to be the big litmus test. That and the general feel of the markets. If we didn't have a big surge in the markets based on rumors about a ceasefire, I don't know if this IPO would have been that successful. And I think that's going to be a barometer for a lot of the other IPOs going forward. Just because SpaceX did well on its first day, on a very positive day for the markets, that doesn't mean all of them are going to do well. First day pops are not crazy. The question is, what do you look like on Monday? What do you look like 2-3 weeks from now? And that's going to be, I think, a big test for OpenAI and Anthropic when they eventually have their debut.
That's a great point, Caleb. Yeah, I'm glad you raised that point. Brooke, you have something?
That this actually, because of the situation in which there was already so much excitement leading up into this IPO, the fact that it did do well, and the fact that we could potentially have those cease agreements. One expert, one strategist, I just read the note, actually saying that this could pave the path for new record highs. And then at the flip side, you do hear about lots of potential volatility. And so I'm so eager to see the way this does play out on Monday, a holiday week, heading into the summer where things do tend to get more quiet. But could we continue to see momentum, especially given this potential ceasefire happening in the background on top of this mega IPO? That was a great point, Caleb.
So Caleb brings up the institutional investors here, and I think we have to point out that some of the biggest winners today are those banks that were advising on the IPO. Goldman Sachs taking that left lead position, Morgan Stanley playing a really key role. pretty much all of the major banks on Wall Street. We've got some numbers here. Wall Street Journal reporting the fee pool for SpaceX's IPO is around $500 million, or about 0.7% of the $75 billion raised. Now, Goldman Sachs and Morgan Stanley, as the top two banks listed, are going to take home the lion's share of that, getting a combined 40% or around $100 million apiece. I was talking to our colleague David Hollerith earlier today, who covers the banks for Yahoo Finance, and he was telling me he's hearing every one of these banks has been on high alert all day, not even in case something goes wrong, but just to see how this goes, especially as they're modeling out the OpenAI IPO coming up, the Anthropic IPO coming up. There's so much excitement for all these IPOs. The biggest winners are going to keep being some of these institutions and some of these banks who get to rake in those fees.
Yeah, and let's go to the Wi-Fi Interactive. I actually have a banking heat map up here. This is our big banks, and you're going to see, well, that's a lot of green. We got Goldman Sachs up 3%. Looks like Morgan Stanley up 1%, JP Morgan up 2%. And I think more broadly, and maybe Caleb, you can speak to this, we've seen financials kind of perk up recently. They haven't been stellar throughout this entire almost 4-year bull market, as it will be in October. But what do you think about the financials right now, especially given the backdrop of all these fees, these major IPOs, and also a general climate of M&A, which maybe is changing because we got raising rates on the horizon here?
Yeah, I mean, the interest rates have been the big anchor to a lot of these stocks, and the fact that their net interest margins aren't growing as much as they may have thought they would be, or investors thought they would be at this point in the cycle. Maybe a lot of people thought we'd have lower interest rates by now. That may have been a drag on them, but the action has been in trading, right, and in M&A and in deal underwriting. And right now we have some of the biggest deals in the history of finance coming to the market. So it's time to get paid. If you're on Wall Street, they should be catering here at the New York Stock Exchange.
I hope so.
For those of us that are still down here on a Friday afternoon, thank you very much. But the point is, if it's not going to be money made through banking and through lending, borrowing and lending because of a favorable interest rate environment, it's going to be deal making and it's going to be volatility, and banks have a way of making money no matter what happens. It's just a question of how much more appetite is there going to be for M&A, for more companies to go public. It's been a while since we had a lot of big IPOs, and finally we have some mature companies coming to market. This could be very good for those of them that are in the underwriting business.
We were talking about SpaceX and, in the morning show today, why go public now, right? Why they were private for so long. They seemingly did not need to tap public markets. They could raise whenever they felt like it. And they were doing just fine, right? And they were seeing the valuation go up and up and up, the private valuation. But there comes a time when you need to raise a lot of money.
Well, the employees want to cash out.
Yeah, people want liquidity.
Right. That's one thing, but also just the company itself saying that if we need to start building up way more starships, start developing our orbital data center technology, testing that out, among other things, in addition to the AI build out that's burning billions of dollars literally a quarter. They need a lot of cash right away.
It could be easier. They could borrow at lower rates just being a public company. It's just there's more transparency, and a lot of times you get from Moody's, Fitch, whatever, S&P, you are able to get a better borrowing rate because you have all this disclosure out there.
Good
and your
credit
company
rating.
is marked to market every single day. We know the closing price. We know exactly what the company is worth, at least on paper, every single minute of the day. So good point there.
Well, and then we saw there was reports that SpaceX was getting favorable credit ratings from Fitch and S&P and companies like that. So they're already out there trying to drum up those positive credit ratings there. So that helps exactly. That helps with both your capital raises, but also your fundraising with debt. So it makes a lot of sense there for them to go public. And like Caleb mentioned, some mature companies here, big companies, they're private companies that are out there looking to, like Jared, as you mentioned, liquidity events, right? You have all these big VC funds that have.
Well, I mean, we talked about Elon Musk being a trillionaire, but he's minting billionaires today. You got to imagine there's a lot of excitement down there in Texas. He's surrounded by people that are finally able to sell. So, well, if not now, but very soon, able to sell their shares, and that's going to be a life-changing event for a lot of people.
Yeah, absolutely.
Yeah, definitely.
Pras, this is something that I've been talking to you a lot about on the desk. Something you've been following. You bring up they've got to raise money to get the Falcon rockets built, to get the orbital data center projects moving along. When Musk talks about some of those further out ambitions, right? Orbital data centers, notching up the amount of rocket launchers he's doing every day, what kind of timelines does he actually put on that? Because this is untested technology.
Yeah. So it's funny because just last week they had a little video put out on some of the Starlink stuff and the orbital data center stuff, and basically they showed the sort of the mock-up of what they view their orbital data center. It was called A1I, I think, or AI1. It's a massive satellite with 60-meter wingspan with solar arrays. You have a central compute module in the front, and then this deployable radiator that just comes out. It's massive, and it's a liquid cool radiator or whatever they call it.
It's something out of a sci-fi movie.
Yeah. So but Musk is saying, hey, oh, by the way, this is all much simpler than our Starlink satellites. We don't require all these advanced antennas and connectivity. It has like a laser sort of connection to each other satellite, and that's not that complicated.
Not to say it's easy, but it's doable.
We asked about timelines, right? So they announced that they're going to make a factory down in Bastrop to make these satellites, and that won't come online until the end of 2027. In the meantime, they will be starting to test some of these potential, shoot up some of these, get them up there and try testing them out. They're the prototypes, I guess, and see how that goes. But he was sort of couching a lot of the things, saying, yeah, we're targeting this. He's like, I'm not going to give you exact timelines. Even he understands that this technology is so advanced, it's so out there, so ambitious that you cannot necessarily have a set timeline. But 2027, probably early 2028, so we're going to probably see more of these things come out. That seems nice as a concrete point of view, and lo and behold, it happens a week before the IPO. Right?
Yes.
Right. And this is why, for some investors, this is a buy and hold story, because this might be a 2050 technology move or a 2040 technology promise. So for a lot of investors, maybe this isn't a quick flip. Maybe this isn't liquidity.
Maybe we'll be here in 2050. I don't know.
Oh, of course we're going to be right here.
You guys be sitting right here with me.
We're going to be broadcasting from the surface of Mars. That is a prediction. All right, I want to say goodbye to you, Caleb. Really appreciate you stopping by from the New York Stock Exchange. I hope you get some food down there. And now I want to bring in Zach Guzman. He's a Trustless Media founder. And Zach, you were on with us earlier this morning with Julie Hyman. You shared your thoughts on our poll of when shares for SpaceX fall below $135. Here's what you had to say.
Honestly, put me in the today camp. I don't know if that's a hot take or not.
Wow,
because
that is a hot take. I don't think that'll happen.
Well, I just think, we don't have, to your point, we don't have any of the things that we normally get to enjoy, which is, hey, how close were we?
Right.
How was the range
Right,
changed?
what was the range before?
Zach, I had nothing to do with this clip that you just saw, but what's your reaction?
Right now, 169 the price.
What's your reaction?
Yeah, look, the day's not over yet, Jared. But the point of that take was originally mostly tied back to what I think the larger point is here, which is still true. I would not be buying at the price that we're seeing right here. And in that poll, mostly talking about where prices are going to go. Just looking at the Morningstar analyst who had, I think, closer to price target here where it could go. And they're in the same camp as me. And I'm sure Praz has been looking at all the analyst reports that could be moving lower here. My point being that just generally everything's structured around this IPO. I just can't see it. It doesn't make any sense to me, Jerry.
Well, let's try to make some sense of prices here. You and I had an offline conversation earlier this morning when you were in our office, and we were talking about the on-chain ways that you could get a piece of SpaceX, even though these you're not necessarily getting a piece of it, but they're using derivatives that are tied to it. It's very complex stuff. But I'm wondering what you're seeing today. Is there any correlation that you've noticed between the market prices that we're seeing with it finally trading on SpaceX versus what the on-chain prices are doing? And just kind of talk to us about that dynamic, because another new thing that SpaceX has brought to the table here.
Yeah, this is the largest thing. Obviously, this would be a crypto-centered take, but I think the biggest winner in the SpaceX IPO could be Hyperliquid. The on-chain perpetual futures exchange had prices indicated close to where we're seeing them trade now about a week ago. And so, we've talked to a lot of people saying that, look, these IPOs are not great for the same reasons why I think we saw Elon Musk try and buck history by the way that he came public with SpaceX. And when you look at that, volumes originally in Hyperliquid were closer to like 20 million, now north of 1 billion in terms of what's been traded there. So it's been exciting to watch this play out. Just because, again, I think as we see more of these work well, what does it start to look like? And what does the CFTC allow for pre-IPO price discovery? I think it's why we've seen some pushback from some of the big players here in terms of NYSE, CME now saying like, hey, wait a minute, if these 24/7 exchanges are able to suck up a lot of the price discovery here, what does that mean for us? And so another lever there in what this IPO represents.
Yeah, let's stick on this for just a couple seconds here, because we've seen this trend towards tokenization, but some of these on-chain tokenized securities are not even related. They don't have the issuer's consent, and yet they're trading anyway. And I just have to think, like, everything tends to do well until you have a liquidity moment. And like in 2010, we had the flash crash. You enter recession, and suddenly there's not as much liquidity to absorb these things. Do you think that tokenization becomes an everyday thing? Do you think it becomes mainstream? And is SpaceX the first step here?
Yeah, I think, I mean, this is something that, the reason why the crypto industry wants to see the Clarity Act passed and is hot right now in Congress, is waiting to see what the Senate does in that attempt to get it passed. Because, again, we're seeing this from Coinbase, we're seeing this from all these other exchanges, is crypto and TradFi, traditional finance, are coming together. And particularly for this, I agree with you. I think that there will be situations, and we kind of saw it with this too. There were other tokenized SpaceX projects that did not get off the ground. No pun intended. Some of these did not work out the way that they were supposed to. And so it does, I think, give some of those markets like a Hyperliquid, more feathers in their cap to say, look, we know what we're doing and we can get this done. And it's a huge opportunity if those are the venues where price discovery happens. We've seen this, by the way, in terms of where oil's prices have moved with the Iran war updates from President Trump.
Sure.
We've seen prices move there over the weekends. And that's why we're seeing a lot of these exchanges rush to catch up. But it's a massive opportunity when you look at, I know you cover the crypto space, Jared, but Hyperliquid being up more than 100% this year should not be surprising. It's wins like this, and it's publicly traded companies like Hyperliquid Strategies, DATS tied to them, that are seeing the benefits up more than 125% this year.
For better or for worse, 24/7 trading seems to be the future, and it's already here in a lot of ways, as you were just talking about. I want to get to Brooke. You've got some Vandatrack research that you're looking at. I'm seeing now SpaceX is the most bought stock by retail investors today, but there's a bunch of numbers, more numbers in this release. What stands out to you?
Jared, heading into support, we knew that this was going to be popular among retail investors. And now to see the way this is playing out, this is definitely not only making history because of the valuation, but also the implications that this has for retail investors. According to this new Vanda research report that just crossed the wire, it is on track to become the biggest IPO for retail investors in recent history, actually taking the crown from Coinbase that debuted back in April of 2021. That attracted 92 million of retail net buying on its first day of trading about, more than 5 years ago. And they're saying that SpaceX has already surpassed every other major IPO launch in the last 6 years. And heading into the close of session, it continues to see strong inflows. And so record-breaking IPO on so many different fronts. And as we've seen, and as we've all been chatting about, to see the retail turnover in recent days in order to get in on this IPO is definitely matching up with the story that we're seeing this afternoon.
Definitely lots of trails blazed today. I want to thank Jake, Praz, Brooke, Zach. Thank you all for joining us here. And there's going to be more Yahoo Finance coverage on SpaceX's first day of trading ahead. Hello and welcome to Market Domination. I'm Jared Blickery, in for Josh Lipton, live from our New York headquarters. There's just an hour to go until the closing bell, and stocks are higher with all eyes on SpaceX. That's following its historic debut on Friday here, opening up at $150 per share at 11:45 a.m. Yahoo Finance's Brooke DePalma is live at the Nasdaq, taking on the energy on this banner day. Brooke, how are the vibes there?
The vibes heading into the close are still the excitement because we are seeing this stock above still its debut price. It's largely kept around $170, spiking a bit higher, but really holding on to this benchmark that's only about $10 higher from where it debuted at 11:45 this morning of $150. This is still at the time at 150, what is an 11% premium to that 135 IPO price that was announced officially yesterday, and also was the case for the weeks leading up to this. And so the momentum seems to continue. This stock now up still, heading towards the close up more than 25%.
Well, thank you, Brooke. I want to bring in here and let's break down how investors are seeing this SpaceX first trade. We got Jessica Inskip. She is joining me in the studio. She's Director of Investment Research at stockbrokers.com. Jessica, I'm going to ask you a question in a second, but first I just want to go to the chart here. I want to pull up AlphaSpace and show you what's going on with the stock here and highlight a couple things, because this really was an historic open. So this is a one-day chart, and it starts at 11:45 a.m. at $150. There were over 50 million shares that traded on that opening print, $8.4 billion. If that's not a record, I would be very surprised. And you can see there have been some zigzags. It's been up and down, reached a high of about 176 and change, and it is right now trading at $168.75. And I want to show you the broader heat map space here because, and by the way, SpaceX takes up so much space here, it's hard to see, but we see a lot of red here. Rocket Labs is down 8.6%. We got satellite companies down 12%. And there's been concerns that SpaceX being so big that it might be sucking away money from other trades. And so Jessica, I'll just kind of bring you in on that. Like what are your thoughts here? This is just so historic.
Yeah, well, I think first of all, it's gone very, very well. So from a market mechanics perspective, I think this is going to start opening up the floodgates, and it was a test and a stress test for Anthropic and OpenAI.
Sure.
And so it's great that this went so well. We haven't seen any stabilization that had to be put into place. I think that's wonderful. I do think retail has some interesting sediments out there. So retail got 20% of the allocation when we were looking.
Which is really big historically.
Historically big, and it's because BlackRock came in, and the sentiment, if you pull it going through the Wall Street vet forums and Reddit a little bit, was it would be negative if retail got full allocation, because then it wouldn't show this insatiable demand.
Sure.
So it's this supply and demand that's also showing up within sentiment, but that's what makes a market. And
yeah,
so,
supply, demand, sounds like a market to me.
Exactly. So I actually think it's gone very, very well. Retail is handling it very, very well, which is my concern because of the changes in market mechanics nonetheless. But I think next week is the true test, Jared.
Let's talk about next week, because we got lots of options opening up next week, literal options, which I believe are starting Tuesday. We're also going to have some leverage ETFs. It's not final. We don't have the final word yet, but they should be available Monday. So if you wanted to day trade with leverage, either to the upside or downside, theoretically that's going to be possible. Not saying that's a good idea, but it's going to be possible. Talk to us about the options, though.
Yeah, so it's going to be interesting to see how those open, because now we're going to get more of a detail. So from an analysis perspective, it's hard to do some technicals because we don't have a lot of time here.
Right.
But the way that I like to think about options, and I know I've said this even on Yahoo Finance multiple times, is
probably to me.
Probably, yes. But we think of stocks in two dimensions, right? Up and down. That's it. We layer on options. Now we have that third dimension. We're going to have path. We're going to have a price. And we're also going to have a time frame. And from an analysis perspective, that's going to give me more insight into retail sentiment, where they think it's going to go. Right now, what seems to be floating around in headlines is, yes, the valuation is super high. We don't care. We want allocation.
Yeah, I've gotten some texts from my family members today asking me if they should buy SpaceX shares. And I keep repeating the same statistic that 91% of IPOs, they undercut their first day of trading sometime in the future. Usually it's within, I don't know, a few weeks to a few months. But talk to us about, you were just talking about trying to get a handle on the technicals, and how much history do you need before you're comfortable trading any IPO, never mind the biggest one in history?
Oh, for me, so I love a good year before I start doing technicals.
All right, well, let's talk to you in 2027.
I know, that's true, but that's when it could be added to the S&P 500.
Sure.
That's actually Elon Musk's lockout period. So there is a lot of more information that's helpful from analyzing where it's going. Now, I would like to see a first earnings report and things like that. And so I know that's a little harsh saying a year, but for my technicals, because I pull quarterly moving averages, you don't have enough data to even
I'm totally with
that.
you there. I'm totally with you. Thinking about the timeline here, we just mentioned there's lockup periods, and we can talk about that a little bit. But SpaceX itself is not a straight shot. So the insiders get to cash out, but not necessarily right away. And there's some dynamics. You mentioned a year. Give us some of those milestones that the company has to pass in that first year.
So it depends. They actually have a lot of tranches. So we can scroll for quite some time. And what I like about this, though, is the different structure of an IPO releasing. So just to step back, and I will answer your question.
Okay,
So,
go for it.
I'm not dodging you there. But I want to bring back the dot-com bubble just for a moment, because we've done a lot of comparisons with artificial intelligence to the dot-com bubble. I feel like those comparisons might come back because we had an influx of IPOs, and then that's what helped.
Palm in 2000, talk tipped the Nasdaq,
Yeah, exactly. Netscape, whenever that happens. But nonetheless, this is different. Now I think we're in a different type of environment. Post Great Financial Crisis, we've had a lot of regulation that came in, and where the liquidity was sucked up from was venture capitalists. Someone needed to gather that. And so it seems like these newer companies, SpaceX is 25 years old, this is different. It is different this time. Yes, because it seems like these newer companies are funded by VC. You create by VC, you cash out when you go to public markets. But this is a much more mature company, and I think that's great. So meaning the lockout, so moving on to your direct question there, the lockout periods are so different. There are tranches with specific milestones within price. There are some within earnings. There are insiders that can do 7% at a time, and there are starting at day 15 for retail and day 30 for retail. And then we don't get into insiders until day 35 to 90. We don't know their first earnings date yet. And then from there are time-based tranches. That's
really interesting. Well, so that just goes to show you. And the reason we're talking about this is because if there's a possibility of millions of shares hitting the market, you want to be prepared for that. And that just tells you that there's probably going to be a lot of volatility, but maybe more than the average IPO in the coming weeks and months. You mentioned 15 days. That's also an important number because that's when SpaceX is, in theory, going to be added to the Nasdaq 100. You mentioned the S&P 500, and yes, the S&P 500 is not going to change their rules so that SpaceX can join it early. But if you own the Qs right now, that's the only Nasdaq 100 ETF, QQQ. Like it or leave it, you're going to be owning SpaceX in a short period of time. Talk to us about some of the dynamics of all these rule changes that have happened to accommodate Elon Musk and SpaceX.
It's interesting because markets are dynamic, and so I always want to follow market mechanics, and I'm just watching the rebalancing and what retail does. And I think it's interesting. The 15-day period is only Fidelity's lockout, and it's not an official lockout. It's just you'll get a little mark on your account where you may not be able to participate in IPOs in the future.
Okay.
Something we haven't talked about and I haven't heard talked about too much, and this is a deep dive. As you know, I like to look at real liquidity systems sometimes in the repo markets and what's happening there. So if we look at the settlement day, so we're trading today, T plus one. You owe me a soda. But it settles on Monday.
Right.
So since it settles on Monday, the way money markets are going to have to settle within the treasury systems, right? Because that's where we're pulling cash from. It is also a corporate tax payment day on Monday. It is also treasury settlement day.
I didn't think we were going to get into financial plumbing today. This is great.
Here we go. So, but what I think is interesting is if we point back to October 31st of 2025, that's when we had really great tech earnings and we were concerned about CapEx spend, and that's caused a bit of a market downturn. But if you actually look at the spread of the interest on bank reserves and the SOFR rate,
and this relates to the Fed balance sheet, and they're paying out a rate of interest to banks that park their money there,
Exactly, that spiked. And then,
so what does that tell you?
So this is next week's a Fed week, so that's where I'm going with it. That's when Jerome Powell put us in ample reserves regime. He didn't necessarily introduce QE. It's not QE, it's market mechanics is the way that he said it, and we had to add more to the balance sheet in order to have those, because the reverse repo facility, because banks can't access the IORB or the
Interest
reserve.
rate.
Exactly.
Interest on excess. Yeah, okay.
So, I'm just saying the RRP is depleted.
That just tells you that there's going to be a lot of focus
Yes.
next week on Kevin Warsh, which comes in the middle of the week. That's
Yes.
going to be fascinating. So stick around, Jessica,
Sure.
and we're going to be speaking to you after the break on all things SpaceX. But coming up, we got more. We get to speak to a SpaceX investor about today's historic IPO. That is up next on Market Domination. SpaceX has extended its gains in the first trading session on the Nasdaq. Jessica Inskep is still with me. She's Director of Investment Research at stockbrokers.com. And Jessica, we just had a rip-roaring discussion, the beginnings of one with the Fed. But before I get to you, I want to go back to the market. I'm going to bring in AlphaSpace here because I've been checking in on the stock price all afternoon. You can see it's trading at 168.75. Here's our chart. I'll maximize that for you. And there are those lows. The low of the day was that first print that traded $8.4 billion way at 150, and we've been in as high as 176. Now, I want to also show you, Jessica, this gets to my next question. I'm going to maximize this heat map here. We got all these other space companies in the red, like Rocket Lab down 8.6%. Are you concerned that SpaceX is kind of sucking away money from other trades? Because we've heard from Vanda Research today, they think that's happening at the retail level, but that's just one dynamic.
Yeah, I do think it is happening on the retail level, and I think it makes sense because if you're adding your exposure to the space theme, TPUs in space, data centers in space, I think that will happen. I really do. So those are some of the names that I was adding to my exposure, so I actually think it's a great opportunity as retail is selling off, if you still believe in those, just purely from market mechanics and the supply-demand imbalances, go ahead and snap those up. So I'm not surprised because the money has to come from somewhere.
Yes.
However, I don't think it's anything that is long-lasting.
Okay, what about the chip trade? This year we've seen, since those March 30 lows, we've seen an explosion off of those lows, mainly concentrated in chip stocks, also mega caps. But we've also heard some rumblings that chip stocks are being sold to fund the SpaceX trade. I'm just wondering, do you still like the AI trade? And I guess I should ask you, did you like it to begin with?
I mean, I've always liked it, Jared.
Okay.
You know this.
Yeah,
I am an AI bull. I do think the AI trade is fantastic right now. It's something you have to be in. We had a wonderful, wonderful earnings season, the best since 2021, and a lot of it
blew my expectations away.
Yeah, same here. You normally see that coming out of recessions. I think that's a great statement.
And we're doing it at a market top.
That's very true, but valuations still seem attractive.
Yeah.
NVIDIA looks attractive. It really does.
Dell went up 30% on one day, and it got cheaper at the same time. It had a forward P of something like in the teens. Anyway.
Exactly. Well, because we keep innovating. So we're moving from agentic AI. There's still this need for compute, and that's consistent. I think the need for compute just got bigger today with SpaceX launching.
Sure.
And we're going to get more transparency now that we can go through all the lovely earnings reports and calls. And now we actually saw a shift to the consumer. So consumer AI, I think, is kind of the next wave. NVIDIA is now making chips for those computers, like you said, with Dell. And those
AI in your pocket.
AI in your pocket. There are even, I know of some companies that are making laptops where AI just stays on that. It's not collected to the internet whatsoever. And so certain use cases that are required for security, for example. So the point is the AI trade is very much intact because it's still innovating.
Let's tie it back to SpaceX because SpaceX has touted itself, if you read the prospectus, as an AI opportunity. Yes, they have Starlink, and that's their main revenue driver, tens of billions of dollars every year, but they see the opportunity and they address, it's called total addressable market. They're calling this a multi-trillion-dollar opportunity, and the SpaceX tie-in is data centers in space, along with everything else. They're going to build the rockets to get everything there, but that seems to be that next AI wave as well. So you're going to have AI in your pocket, but then it's going to be talking to AI in space.
Yes.
Talk to us about that.
Yeah, so the need for compute.
Yeah.
Google I/O, they announced TPUs in space. There's NVIDIA is involved in that, so we're going to call all the hyperscalers out to be connected to that. I think that leads to photonics and the light connectivity as well. There's lots of opportunity there, but to your point, we need those data centers. Very much so, and I believe SpaceX is going to actually lead that because they're leasing them out even. It's part of their business model, and I think Elon Musk is a businessman at the end of the day, and that's certainly what we're going to see. And I think that's where the biggest opportunity is right now because that is the biggest bottleneck right now.
And it's all about the bottlenecks as we saw with the memory chip trade.
Yes.
We got about 90 seconds here. I do want to finish our Fed conversation.
Okay.
Let's keep it high level here. We got
Sure.
Warsh coming in. He wants to lower rates. Probably not going to happen, but how do you see this playing out? Not only at this meeting, but through the end of the year.
Well, I think the thing to pay attention to is is he going to look at trimmed mean PCE and adjust the preferred gauge?
So we got two different inflation gauges, and then you can also modify that preferred PCE gauge, get the trimmed mean, because that's giving a more, the kind of the answer he might like.
It might be the answer he might like. And so what's important is credibility. So if it gives him the answer that he likes now, if it doesn't give him the answer that he likes later, he better make adjustments.
Yeah.
Otherwise, he loses credibility. Then we look at the bond market reaction, and that's who really matters, the bond market.
Yeah, the bond market drives all of this.
Yes, it does.
But Warsh still has to gain he has to work with his colleagues, and the Fed has, just at its last meeting, and arguably there were 4 different types of votes there. So one vote, 3 dissents, and do you think he gets the respect and is able to get the Fed unified and back on track? Or is that even a good thing? Do we want, an open Fed where everything is on the table and people are voting in different ways?
I mean, if you have competing dual mandates, they're going to vote in different ways. And Powell even said that as well. They just state their case. So if he can bring everyone together, I think that's very important. We want that, but we also just want to understand why. And my biggest concern is him pulling away from pressers. I want to hear his commentary. I really do.
Yeah, we've gotten used to those things. I objected to them in the beginning, but now it's nice to have that transparency.
You were wrong, Jared. You were. No, I'm fine. I'm kidding with you.
Jad, always appreciate you stopping by here. Thank you.
My pleasure.
And after much anticipation, SpaceX is finally a public company. You can see it on your screen there. Stock surging in its first day of trading. And for more, we're bringing in Lisa Rich. She is the Chief Operating Officer of Explore. So thank you for joining us here. Lisa, just give us your big picture impression of what has happened today. There's a lot going on.
Yes, and thank you for having me on such a historic day, Jared. We've been looking forward to this for over a decade, following the company since the start of it and investing today as well with more, we just talked about the cash being outlaid for this investment,
Sure.
and I'm one of the people. So in the past, we talked about every company becoming a space company, they just don't know it yet. And the irony of this story is that every investor will become a SpaceX investor, at least on the Nasdaq.
Sure.
And they didn't realize that either. So it's becoming ubiquitous. And now I think more of the public is starting to understand the story of this value creation beyond Starlink.
Yeah, so we're all going to be space traders. I can accept that. In fact, I think it's happening already, and that is the future. But it's always a question about timing here. You mentioned that you're an early investor, and you mentioned that you're buying more today. Are you price sensitive here? What's behind? Are you just going to buy as much as you can get? What's your strategy here, and what's your end goal with owning all these SpaceX shares?
Yeah, it's interesting because typically with an IPO this exciting, the philosophy is, you just wait until it settles down and then you put your money in. But I think in this case, the ownership at this point is important to have that skin in the game now as the growth story begins. They have the data center plan. They have Starlink operational. As we look at the A1 satellites that they're building that are going to be individual data centers that will mesh in the future, you have to think about the compounding capability that each of these launches is going to have, just as Starlink is compounded with now over 10,000 satellites. So an individual data center is the size of a swimming pool.
Can you give us an outline here? When can we expect data centers in space realistically?
Well, the PEZ dispenser that they've designed for Starship has been tested for deploying those specifically. And Starship has done, of course, many practice launches,
Sure.
getting more acceleration in the capability with each one. But you've got the goal of Starship being fully packed with SpaceX data centers in the next 12 to 18 months. So that story is becoming reality.
Yeah, and it gets back to the main point, I think, here. If you read the SpaceX prospectus, this is being billed as an AI company. This is AI infrastructure. What do you see about, we've heard lots of people speculating about a possible merger with Tesla, and that might come sooner than people think. As an investor, does that concern you? Are you excited for it? Do you want just one big Elon Musk company?
Well, I've covered all the bases, Jared. I'm a longtime Tesla investor too. So that merger sounds great to me. But we talked about the Tesla being integrated with Starlink so that you have that full interconnectivity in your car. There's a lot of synergies here. But I think the larger story really is that each component for the future, from chips to satellites, to data centers, to the Boring Company, that's the future on Mars. Elon has his foot in the door and is enabling all of these. So if you've got your capability built out for macro hard, and the batteries and all of these elements for the future, and you're ahead of everyone else in these arenas, you put them all together, and now we're leaping forward even faster.
All right, we've been talking a lot about SpaceX, but let's talk about your company, Explore. Are there any tie-ins here, benefits that you're getting directly from this historic IPO, or is it more down the road, just in terms of, okay, history is marching, the new tide is kind of marching on here, and you're going to be a part of it?
We are going to be a part of it, definitely seeing momentum with a lot of investors wanting to pay attention to where we're going with our company, which has multi-sensor satellites on a platform collecting exquisite data that would be utilized by these data centers. We're very unique in terms of the quality of what we can collect and how we process it, and then can deliver it to data centers for their needs. So we are definitely part of that value chain, and it's exciting to see investors waking up and saying, gosh, I need to be investing in the raw materials and the hardware. Well, ours is software in terms of the data, but so basically a data company, and they're the data storage company in space.
I want to get you out on this. What do you think people are going to be, what do you think the space looks like? And I use that term in several different ways, but what do you think the space looks like in 5-10 years? And then from that point, kind of looking back on this day, do you really think this is an historic day? Or is this just is this just another big event in a year of many big events?
Well, this may be a year of many big events, because it's enabling other companies that I'm an investor in 37 commercial space companies. We know that there's traction to go public with other space companies like Axiom Space, for example, or Umbra, that's doing synthetic aperture radar. All of the I would say the pathways to growth have been built quietly over the past years, and as we see them compound 5 years from now, I think the financial story will be spectacular. AI and that value there is growing by the day with terrestrial data. What happens when we open it up to data that's exquisite and otherwise unattainable from space?
All right, and we're going to leave it there. Lisa, really great talking to you. Thank you for your time.
Thank you.
And coming up, we got some more action in today's top trending tickers next up on Market Domination. It is time to cover some of today's trending takers, brought to you by SIBO. We're watching SpaceX, other space stocks and chip names, and joining me now live from the Nasdaq is Yahoo Finance's Brooke DePalma. So Brooke, we got to talk about SpaceX here. You were there at 11:45 a.m. when we got that first trade, 56 something million shares, $8.4 billion. What was it like?
Yeah, I mean, the stock opened up at 150, now hovering just above 160 after surpassing 170 earlier this day. Definitely the excitement, the energy, it is all there. But you can't help but also follow the story on social media as well. Elon Musk, particularly sort of making this more than just an IPO itself. There are so many ways that this IPO is so unique, including that $135 IPO price that we got even in the filing.
Sure.
On top of the fact that retail investors are getting a larger piece of pie. But I also want to draw your attention to this tweet where they actually gave the underwriters, supposedly Elon Musk giving the underwriters green shoes because of the green shoe option, essentially saying that underwriting banks can sell more shares than actually exist within the offer. Typically, that's upwards of more than 15%. And so it just goes to show that the energy, the excitement, and the anticipation that this IPO going into it was already going to be oversubscribed is certainly there. And you could see this just sort of playing out not only here at the Nasdaq, but really across social media. A lot of social posts that I've been putting out are getting such high engagement. So really, SpaceX now trading still above nearly 19% more than that IPO price of 150.
We were just talking to Caleb Silver down at the New York Stock Exchange, and guess what they're watching too. All right, we got to move on here because looking at some of the other space stocks out there, you could say Rocket Lab, Virgin Galactic, EchoStar, UFO ETF, they're all trading lower here. And this raises an overarching concern I've heard a lot this week, which is SpaceX is so big, maybe it's just sucking money out of other trades. And there are concerns that maybe, we're putting in a temporary market top here because of its size. What do you think, Brooke?
Right. Well, if you take a look at SPCE, which is quite similar to SPCX, which is what SpaceX is now trading under. That's Virgin Galactic. And going into this year to date, the stock was up more than 22%. Now the stock trading just below $4 per share. And so you have to wonder, with so much discussion around how this SpaceX IPO was really providing such momentum to the space economy, the interest in the space economy, you have to wonder how these IPOs, or rather how these companies within the space sector will perform following this, when it seems like everybody wants to be in on the company who seems to be doing everything. I mean, Elon Musk wants to build a colony on Mars. Elon Musk is already putting data centers, or rather satellites, into space, eventually data centers into space. He also wants to get colonization on the moon. And so they're playing into these long-term bets that's also taking some near-term strategy, a company that's not profitable, a company that's revenue is far less than its valuation, but it seems like investors right now willing to take the risk, perhaps moving away from some of these old school, long-running space companies that we've seen listed for quite some time.
Sure, like Boeing, Lockheed Martin, et cetera. Want to talk to you about semiconductors because they've had an incredible run this quarter, but they've been under a bit of pressure at various times this week. And part of what I was just talking about, the concern that some of that the SpaceX trade is being funded by other parts of the market. Well, are we seeing that in the chip trade here?
Yeah, what we're seeing as we make our way into this afternoon, if you take a look at what we're seeing within the YF Interactive, we are seeing some intraday trading, mostly a mixed picture, but NVIDIA, Broadcom, Micron, ASML, all down, moving lower. But at the same time, you do have some stocks that are benefiting not only from perhaps this risk-on sentiment that SpaceX is inviting to the market, given that it has outperformed expectations, certainly well above that 135 IPO price, but on top of that, too, you have this potential ceasefire between the U.S. and Iran. So that's certainly contributing to some momentum that we're seeing in the market, too. But some of the names seeing the most momentum today include Intel, ARM, Qualcomm, even SanDisk seeing a nice pop. And so certainly these names that are playing into this larger AI narrative are seeing some tailwinds because of the SpaceX IPO, Jared.
Yeah, and you got to think that the winners, that might be a narrower group going forward. But I appreciate you stopping by here, Brooke.
Yeah.
And in an era where Elon Musk's SpaceX is sending public market buzz into a whole new stratosphere with excitement for the future, our next guest is looking to the past to uncover the secrets of building wealth. Joining me here is Joseph Moore, historian, investor, and author of How to Get Rich in American History. You can see it on your screen there. Joseph, it's great to have you. Just got a copy of your book, and I'm excited to read it. But I hear it's kind of been ticking some people off. And so I want to get your, no, because, here's the thing about market history is a lot of preconceptions that people have about markets and everything, they get blown up when you actually dig into things. So first, I want to ask you about SpaceX. That is a story of the day. What are people getting right? What are people getting wrong in it?
Well, I think you hear a whole lot of conversations around things that look back to maybe a few decades of history looking at IPOs, and that's perfectly rational, right? IPOs tend to pop, they tend to come back down. But the bigger question is, what is the historical analogy here to this type of a company? And it might actually be General Electric, right?
Oh, interesting.
So this is the last, Elon obsesses over Nikola Tesla, but he actually acts a whole lot like Edison, right? He brings together teams, he tries to simplify problems, and he conglomerates a lot of different innovative companies together, and he sees the synergy when maybe others don't. And that's exactly what General Electric was. It was a lamp company, a manufacturing company, a transportation company for infrastructure in cities. And so there were all these companies that Edison understood would feed each other with innovation over time. And for 100 years, that was correct. And so I think for those who are long this idea, there's actually a really good historical precedent that you're not totally off base. We have seen an innovation disrupt a brand new space where there's a lot of competition before. The other part of that, much like General Electric, we forget how much competition was in that space in those early days. And sorry for the pun on space, but there's a lot of innovation in AI, there's a lot of competition, all these things. Is it better to be one of those companies or to bring all those innovations under one roof, which is what General Electric did? Yeah. Now, those analogies always break down at some point, but there's at least a reason historically to think about a long position there.
Nevertheless, we've seen sometimes the big IPOs and ideas come into market when they have actually top-ticked the entire market. And you could go back to U.S. Steel in 1901, RCA in the 20s, that was radio and television, Ford even when it came out in the 50s, and then more recently, a trade like Rivian in 2021. That top-ticked the pandemic run-up that we were seeing. Coinbase IPO, that top-ticked Bitcoin for a while. So do you think there's a risk here that the general market might be having a little bit of fatigue right now, and we might need to regroup before we digest all this new supply coming into the market through these IPOs?
It's entirely possible. My understanding of this is very much that as the market itself has changed over time, and the market you're buying today is not what your grandfather bought. Your grandfather bought a share of future profits at today's prices. You're buying a future buyer at today's prices, because from the Washington administration to Michael Jackson's Thriller album, 96% of returns were dividends. Well, that's gone. That day is over. And so what you are investing in is the future buyers of these companies, by and large, and the future buyers of companies like SpaceX, which are kind of conglomerating all the innovation in one place. There's at least an understanding that that might be very different than, say, Rivian, which is saying we're going to do a truck, right? So I think this is a bigger, bolder initiative, for better or for worse. We'll yet to see.
Final frontier talk. I love it. So let's broaden the discussion here. A few things in writing this book. What has surprised you as you've done your deep dives through history and like things that would buck conventional financial knowledge?
Well, I think understanding that what always worked is always changing. And we have this idea that history is going to teach us the one or two things that always worked, and then everybody forgets it and they have to come back to it like they're a
new playbook set.
Like they're a scolded child, right? But if I take you back to, say, 1912, right, we're a few years away from Babe Ruth playing for the Yankees, And everyone you would have turned to would have told you exactly what to do, which is buy bonds and 4 to 5% dividend yield because there's a world with no inflation. If I take you to 1912, there's no inflation, 0%. Go back 100 years, Napoleon rules France, 0%. Like the price of milk is the same for 100 years.
And then suddenly it goes 8%, 18, 17, 15, 15. Nobody in the world had seen that happen. And so everything that had worked in the old playbook was thrown out. So we see these shifts, these kind of epochal shifts that kind of create a new way of doing things, a new way that is the right way until that doesn't work anymore. And so we're probably 100 years into the modern financial era. And I can go back in history and find pretty much everything that you have on the street today, every financial strategy that you see today comes about in that same 5 to 8 year period. That's really interesting. And I think that there's a modern parallel here because the old playbook of 60-40 that really worked starting in the 1980s, well, that got disrupted. That got torn up in 2022 because we had a bear market in stocks and bonds, which traditionally cushion the blow. Well, they lost money too. And so we had the worst year for 60-40 in something like 100 years. And it seems like investors now have to learn a new playbook rather than kind of relying on the old one. So talk to us about that dynamic.
Well, I think that's exactly what we're talking about, right? Like in 1912, no grandmother or great grandmother had ever seen inflation. Had never seen prices rise. So nothing they told their children to do worked. In the same way, like your grandfather had never seen a time when bonds did not insulate you from the problems with or the volatility of stocks. Now everything's increasingly correlated. And so we're in an era when the old playbooks are rapidly falling apart. And I think people are trying to stretch to figure out what does a new playbook look like.
We had time for one more. I'll give you the floor. Talk to us about something interesting in your book or just anything you want to add to the conversation.
Yeah, no, thank you so much. I think the real lesson of history is that history is not a law of physics. It doesn't pull you down like gravity. You always have to revert to the mean because the mean is moving through time behind you. And the real deep studies of history, mine and others, are trying to point out that what we think history teaches us is often changing itself. And so it's dangerous to use the past in the wrong ways.
All right, Joseph, you are a gentleman and a scholar. I appreciate that. Thank you. And coming up, we're going to be hearing from the president of the Nasdaq on SpaceX's blockbuster public listing. Up next. It's an historic day for SpaceX, with the space company going public on the Nasdaq on the largest IPO of all time. Our executive editor, Brian Sozzi and Julie Hyman, spoke to Nasdaq's president, Nelson Griggs, on the company listing and how the exchange aims to remain competitive for the rest of this year's blockbuster listing. Take a listen.
You and I have talked a lot on really big IPO days at Nasdaq. With SpaceX, there are a lot of new retail investors that are going to be brought into the market. They are believers in Elon. They're believers in SpaceX. Help them understand how difficult it is to bring this amount of shares to market in a set period of time.
Yeah, it's a big effort, and that effort is really led by the lead banks. In this case, you have Goldman Sachs and Morgan Stanley. I think you look at the scale of the retail offering at roughly 20% of the offering size. That alone would be one of the largest IPOs of all time. So I think the fascination by retail, the excitement around obviously what Elon has accomplished with Tesla and now what he's building at SpaceX certainly has a lot of interest from the retail community.
Nelson, as you've gone through this process, bringing a company like SpaceX public, what has surprised you?
I think in terms of surprise, if you date back in time and say, would we think there'd be a $75 million raise IPO? That can be a decent year for the entire IPO market. So I think I would say a surprise, but just I think as you look at a trend, we know that companies are staying private longer. We do know they come to market much more scaled. SpaceX has 3 major divisions, and each one is well north of $1 billion in revenue. So I think just the size of companies going public continues to surprise us, and I think we're going to see more of that to come as the year progresses.
Nelson, a lot riding on this IPO, it being so huge for you guys. And I've heard a lot of people harken back to the Facebook IPO. I know it was a long time ago, but I'm curious if you can give us sort of a behind the scenes of what you guys had to do, what boxes you had to check in advance of today to make absolutely sure that it was going to be smooth. And then what does success look like?
Yeah, thanks for the question. So we've done an enormous amount of work since Facebook. There's been several thousand IPOs on Nasdaq, the largest direct listing of all time, and Coinbase. So I think we have re-engineered the entire system, but that was done in process with our partners, the lead banks, who look to us to provide a couple things. They start off by saying they have to have the right infrastructure, the right capacity to exercise any sort of deal, and they are very, very comfortable. We test in orders of magnitude of the largest deal we've ever had. So there's the technology underpinning the process, but then they rely on us mostly for incredibly detailed, specific data on order flow every given second, so they can communicate with their clients to make sure they're fully informed about where the deal is. So ultimately, when they have this initial pricing, the stock open for pricing, which is usually about a 3-hour process, they feel good that they've kind of done this massive trade. There's some stability where the price may be, although we certainly expect some volatility after the price opens. And then the last is the human oversight. So we do have a significant amount of communication with the entire street today, primarily Morgan Stanley. There's a whole team that's communicating with them. So they rely on us for technology, transparency, and then also the human oversight. And as we've done this year alone, 7 of the top 10 IPOs in market. We've had, again, the last 5 years, we've had the 7 of the top 10 IPOs. They've gotten very excited and comfortable with our process.
Nelson, I know, again, as you pointed out, it's the banks that figure out where the stock should trade, right? And it's people in the market. But I'm just curious, does it matter where the stock opens? Does it matter where it closes? Like, how closely are you tracking all that stuff?
Well, I think when you look at market momentum, it can certainly be helpful to have an IPO shareholders on that day who decided to allocate capital into the IPO. Having a good pricing outcome on day one probably helps more the long-term, I'd say, excitement around the IPO market. So from that perspective, yes, it's important. In a company, though, their journey, this is obviously a company that they are building for decades to come. The vision is truly incredibly remarkable. So a day one pricing is not something that they're going to set their future on. But again, it does help to continue momentum in the market. And we have a very, very diversified pipeline of companies looking to go in July, and then again as the year progresses. So I'd say that's where probably it matters most.
Nelson, how important is it, the relationship aspect to all of this? This is the second really Elon Musk company that Nasdaq has brought public, and I remember Tesla as if it was yesterday, but it was years ago at this point. Why does Elon trust you guys the most?
Well, I think today Nasdaq is home to the trillion-dollar companies. So you look at the companies that are driving the innovation economy. They do list on Nasdaq. We have had a good relationship with them and their team. If you think about how companies evaluate an IPO, they do think about brand. They think about areas such as how they help us communicate with investors, index opportunities, and then it's the partnership. So over the years, things come up as a public company, and they want to know they can come to Nasdaq for advice on regulatory matters, on market matters, and even when we just think about the overall business ecosystem that companies on Nasdaq, how we connect them to our community. So I think trust is everything, and I have been here 25 years, so it has meant a lot to us and our partner companies to have those long-term relationships.
This is a hell of a thing to have happen, Nelson. You have the world's largest IPO, and by and large, knock on wood, it's going to go off relatively seamlessly, at least to us watching this from afar. We're only a couple miles away from you. Do you see yourself as in the pole position to land OpenAI and Anthropic?
Well, we never take anything for granted at all. And when we get to deals, we focus at Nasdaq as a company on most every IPO, but you get to companies of this size, this is what we call a one Nasdaq effort. Obviously, they're very, very important companies, generational companies, so we're highly focused on them. And I do think when you look at where the largest, most innovative companies in the world list, today it's on Nasdaq, but we don't take that for granted. We're going to work very hard to show them that we are the best home for them.
Well, go get your well-deserved drink today, Nelson. Nelson Griggs, President of Nasdaq. Congrats to you and your team. This is a big one, man. We'll talk to you soon.
And let's get a quick check of the markets here on AlphaSpace as we head into the close. We're looking at the Dow up about 342 points, or 2/3%. Nasdaq up about 1/4% to 25,885. S&P 500 almost up 0.5%. And the CBOE interest rate on the 10-year Treasury note, well, that is up 2 basis points to 4.487. And coming up, we're going to have you covered through the closing bell on Wall Street. Stocks are ending the day higher, lifted by the historic public debut on Elon Musk, SpaceX. You can see here the company ringing the bell, the closing bell, and I believe that is the top of the Nasdaq. Well, let's get Yahoo Finance's Brooke DePalma, who is there at the Nasdaq right now. Brooke.
Yeah, it seems like it's a mix between SpaceX headquarters as well as the roof of the Nasdaq, which overlooks the entire Times Square. You also could see the Hudson River outside there. To take a look, though, at how exactly the stock is ending today, using the YF Interactive, we'll go to trending tickers over here. Of course, SpaceX is the top trending ticker on our site. It has been all day since it opened at 11:45 a.m. Eastern. Right now, you're seeing that stock trade around 161. Keep in mind, it debuted at 150, and so we're still looking at an uptick of more than 19% from its IPO price and well above that 150, and even more so above the IPO price of 135. You could see right there them ringing the opening bell in the middle of Times Square. I mean, pretty iconic there. That's where they ring the New Year's Eve ball drop every single year. So it just goes to show the momentum. You see the rocket ship taking off. All three major indices moving on this. You see the Nasdaq, Dow, and the S&P 500 all moving higher.
All right. Thank you for that, Brooke. And the historic IPO of SpaceX did not disappoint Wall Street. Here with more on the first trading day for the biggest IPO in history. Let's get to Yahoo Finance's Praz Subramanian. Praz, what a day.
Yes, indeed,
what a
Jared.
day.
Jared,
What big picture? What sticks out to you here?
You know, we had an interesting trading day today, right? We were sort of indicating opening at over 170 and thereabouts, and then it sort of came down, opened at 150, which was a little surprising. We thought, oh,
they
maybe.
IPO'd at 135, so it's above that, but it looked like things were moving.
Yeah, it's 11% pop, which wasn't, what usually considered a great move, but then it built up throughout the day. It went up as high as, I believe, 178 at one point, before tailing off just a little bit, where we finished up 19.2%. So perfect 20% move there, right, for an IPO day. You didn't leave too much on the table. It still give people a nice little pop to enjoy, and what you're talking about right now.
Yeah, I mean, there was so much that could have gone wrong. I would say pulled off a pretty good deal here. We've talked so much about SpaceX from so many different angles. Elon Musk is a trillionaire, and now investors are looking to the next stage. So we got options opening up next week on SpaceX. We got leverage ETFs trading maybe on Monday. But what are you going to be paying attention to next week? What's your day two story for SpaceX?
I think it's what you mentioned there. It's some of these ETFs that are going to come into play here. Going to be trying to buy some stock to get into these leveraged plays, which are always interesting, right? I mean, it's not always the best financial move for someone long term.
But they're going to be there.
They're going to be there. You mentioned options trading. That's going to be happening. We already have the onset of tokenized trading that happened before and after. So it's interesting to see where the stock will end up kind of going. Are we going to have more volatility? That's sort of what a lot of people are saying now, is there's going to be some volatility in this stock for a while now, until you have more sort of float coming on, have more information on the stock. I think that's the thing to watch, is how does this thing trade over the next week or two? Is it could you see it dip below 135, right? Those are some of the questions we're asking.
Well, that's a great point here. And that's one of the things we've been talking about, is that most IPOs actually take out that first day trading low within a few weeks, a few months. And in fact, almost all of them, 91% do it eventually. So the question is, if you're looking for the best trade, you kind of got to be a market timer here, but not everybody does that. SpaceX earnings, you've gone through the financials. I'm sure everybody's going to be glued to their seat, because June 30th, that's the end of the quarter. How do you see earnings season shaping up for this?
I think it's going to be, so watching Starlink, seeing how that business keeps growing.
They are the engine of revenue.
Yeah, that's the big profit engine for SpaceX. How is that going? How's it continuing? Are they growing that pie? Are they cutting into their revenue per user to grow the business, things like that? But then also, we talk about the AI sort of initiatives at SpaceX. They were taking a lot of losses in the last year and the last quarter once they incorporated XAI into that. Is that changing? Is that improving? Is that multi-billion-dollar quarter loss sort of shrinking? Are these compute deals with Anthropic and OpenAI helping that? They should be, right? You're talking about more than $2 billion a month in extra revenue. Can that compensate for the amount of money they're investing into that Colossus 1 and 2? I think people want to take a look at that, see if Grok is actually improving. There's a story today on Bloomberg about how SpaceX had problems integrating Colossus with Grok. And that's why they were able to. That's why they were offered, they took the opportunity to lease out that compute space, right? So that's sort of, you want to hear some updates on that,
Yeah,
right?
please.
Yeah, no, we would like to hear that. Yeah.
We had time for one more. I'll give you the floor. What's your final thought here on SpaceX day one?
I think it went off, like you said, better than expected, right? I was sort of
before noon.
I was concerned we're going to have one at the earliest, maybe 2 o'clock, maybe in the 3 o'clock hour. Could be freaking
Which would be
out.
unprecedented.
Could be freaking out. Retail freaking out. Institutional money. What's going on here? Why are we not trading it? 11:45.
Yeah.
Very orderly. Came out. Not any crazy swings, just sort of traded nicely, steadily.
Vaulted, yeah.
And then today, if you look at the chart, just a very nice little move up and this little dip at the end of the day, but nothing crazy. And then we're here to live another day on Monday and see what happens with the stock another day as a public company.
Yeah. Well, we will talk about this Monday, I am sure, Price.
Yes.
Thank you for that. And let's see where investors are putting their focus in as Wall Street wraps up a busy trading week. Joining me now is Michael Monahan. He is a founder, ETS partner, and portfolio manager. Thanks for being here on a Friday afternoon, an historic one. Let's just start with SpaceX and get your first initial thoughts here on the first day of trading.
It's great to be here, and we really appreciate the way it traded. It's sort of the piece de resistance of the legendary Goldman Sachs franchise, IPO franchise. They went ahead and put in a perfect 20% pop, as you talked about. But what we really liked as real buyers, right? We were real buyers on the open. I think that match off they did was masterful. So rather than giving the big pop to the flippers, they managed that process where they got all that flip stock out, sold it to real buyers like us at a decent price, and allowed us to participate in part of the pop. So Goldman Sachs, the legendary IPO franchise, I think they earned their money today.
All right, well, let's talk about the market in general, because we saw this week, we've seen semiconductors, the heart of this AI trade, take a few stumbles here, and just getting some of the research notes out from companies like Vandetrack, at least on the retail side, investors were selling some chip stocks to make room for SpaceX. Do you have any concern that SpaceX and these other IPOs are going to just suck too much money out of the system? Any broader market concerns there?
So we invest for such a long term that we don't look at a lot of these day-to-day moves. We know other market participants do. So I think people are going to go home over the weekend and remember that Elon just raised $80 billion, that Google raised $80 billion, that Larry's about to raise $40 billion for Oracle, and that there's going to be a whole lot of CapEx going into these names. I think the sell-off last week of those names was really more of a risk management at the big pod shops and multi-strats, where when we saw that hot jobs number a Friday ago, we saw a little tilt in the market, and those guys all lean the same way. So as soon as it started to undo, they had to all undo together. Talking to our trading counterparties, that seemed like what it was, really more than heavy selling. It was really just a bit of certain guys leaning in together, had to lighten up to manage their net books, combined with the fact there weren't a lot of bids, as everybody, myself included, was so focused on how we wanted to get involved with SpaceX that I think everybody had their pencils up this week. I think this weekend we put our pencils back down and figure out what we want to buy this week. We actually bought a couple other names today that we were excited about based on what we had done.
Yeah, let's talk about those. What else do you like there?
So we bought, for example, we bought the two Nibius. We bought, the Neo clouds. We bought ARAN, and so we're buying more names in the AI space. We also bought a little Rocket Labs today as well.
All right. Well, let's go back to last Friday, because that was when we saw the stumble. And arguably the trigger there was that hotter than expected payrolls report. And it just speaks to the fact that we have an economy that's a bit hotter than people expected. Probably a good problem to have. But now there are concerns that the Fed is going to be raising rates instead of cutting them, and we're seeing one rate hike already penciled in for the end of the year. ECB just raised rates. How much do interest rates factor into your models, or is that just even too short term for you?
That's too short term for us. So we're not particularly rate sensitive in how we think about the world, although some of our names, because they're high growth and you have the implied interest rates and their terminal multiples, are in there. I would make 2 points on jobs. Number one of our concerns earlier in the year is, are we going to destroy consumer jobs faster than we can replace them? We're not seeing that. In fact, we're seeing the consumer get stronger. Those jobs were led by restaurants, which are a leading indicator of consumer confidence. That's number one. And two, I think that we'll get what I call as a phantom rate cut, meaning the data is showing that we probably should raise. I think the compromise under the new Warsh regime will be we won't raise. And in this economy with the data we're saying it should be a rate hike, but I think we won't get them, and it's what we're referring to internally as a phantom phantom rate cut.
I like that, and I might use that. Let's talk about the space economy writ large. What are how do you see this playing out in the investing landscape? Because we've seen initially there was the picks and shovels trade, we've seen mega cap, and we had the hyperscaler trade, but where is the next leg coming from?
So I think it's a continuation of where we're at, where it's, kind of as Jensen says, it's a race to see who can build out the lowest token costs. And the folks investing in that cycle are going to have it. Look, we're sold out, hence why we bought the CoreWeave and the Nibius. There's just not enough compute power right now. And, Elon is going to be putting his satellites up. It's going to take a year or two. It's going to take Starship getting perfected. But I think we're just going to see a continuation of the ongoing CapEx trade.
So you hinted at the downside effects of AI, which to a large, people have gotten fired for official reasons of AI, but we've also seen job creation here. But we also saw the AI scare trade earlier this year manifest itself. Software stocks overall, they peaked in October of last year, and the concern is that AI was just going to eat all these software companies' lunch, and I think it was definitely overblown at the time. But when you're looking at companies to invest in the software space, maybe, what are you looking for there?
So we own a lot of software, and we think some of it's durable, and we think the SaaS apocalypse is overdone. But it needs to be an enduring franchise. We like Salesforce, we like Palantir. We're of the theory that enterprise software, rather than being disintermediated, will be the trusted endpoint into the enterprise. And as long as you're in that trusted endpoint, we think enterprise software still has room to go here. We think the SaaS apocalypse is well overdone.
Any misconceptions out there that you'd like to clear up? It could be in the retail space, it could be in the institutional space. Like, any opportunities there to lean against what the herd is saying?
The one thing that we really look at and want to understand, and I don't know that I have a great answer other than just reminding people that memory stocks and some of these semiconductors are really cyclical stocks. We have a secular bull and a big CapEx spend cycle, but at some point, we need to all keep in mind that semiconductors, especially memory, obviously outside of the high IP, right? I'm not putting an NVIDIA, I'm not putting into this, but the more commodity semi names, those are cyclicals, and as people are trading them, they need to keep that in mind.
Yeah, all right. All those Micron investors up 1,000x, take note. Michael, it's been great chatting with you. Thank you so much.
Great to be here.
All right, and coming up, we are going to take a look on the outlook for the EV space next on Market Domination Overtime. Electric vehicle sales in May see their best month since EV tax credits were revoked, according to a new Kelley Blue Book report. This comes amid several detours in the auto industry that may be shifting driver behavior relating to EVs. One company in the middle of this ride is ChargePoint. CEO and President Rick Wilmer joins us now to discuss alongside Yahoo Finance's Praz Subramanian. Rick, it's been an incredibly busy day here. Speaking of EVs, we got Elon Musk with SpaceX, and I don't have to bridge that. I'd just like to get your big picture reaction on what we've seen today with SpaceX.
Wow. The biggest IPO ever. Technology driven. AI stuff in space. It's exciting. I think AI is going to change the world. It's changing our world, and watching all the investment happen, it's just an exciting time.
Yeah, Elon obviously getting his start, as Jared is alluding to, with Tesla. And for you guys are pretty levered to the EV sales and EV usage trade. And there was a little bit of a downturn there with the loss of the EV tax credit. But then high gas prices came along, and we're seeing adoption increase, and that's helping your business, right?
Absolutely, it is. We've seen data points indicating that EVs are starting to come back into the market. Buyers are starting to adopt EVs again. We've seen it evidenced in our home charger sales. Interestingly, plug-in hybrids, can go to a gas station or plug in, and we've seen the ratio of plugging in on hybrids go up here recently. As reported, we saw a great month of sales in May here in the U.S. And a lot of that is not only driven by the high gas prices. Now an EV is probably less than half the cost to operate for fuel. And when you take into account, service and the lack of the need for service on EV, it gets even better from a cost of operations. But you've got a lot of used EVs that are coming, a lot of EVs coming off lease going into the market as used vehicles, and they've depreciated pretty substantially. So their price points are on parity with an equivalent gas vehicle. So you're just seeing a lot of adoption. And I think one key point that a lot of people miss, which is profound, is that EV retention's way above 90%. Once people go electric, they don't go back. So we don't care if people get new EVs or used EVs. What really drives our business is the cumulative number of EVs on the road, and we're seeing positive signs there.
That's really interesting. Just thinking about the economics from the consumer point of view, so the vehicles themselves looking more economical, especially when you factor in the rising price of gas, but you still have charging anxiety. I've rented EVs a few times, and it happens like clockwork. When I most need that charging station, it's either hard to find or it doesn't have the right hookup for the car that I'm renting. I'm just wondering, when do we see the infrastructure so saturated in the US that we really get over a lot of those fears that people have about not being able to fill up when they need it most?
Yeah, Jared, that's a great question. And we're happy to solve that problem for anybody that wants to put EV chargers in their place, whether it's a workplace, a retail place, a fleet depot, a home, a townhouse complex, apartments, whatever. But I think what it really comes down to is, rather than having the government subsidize, charging infrastructure and EV sales with tax credits and incentives, free market forces really need to come into play. And what we're starting to see now in commercial, for example, and when I think about the commercial market, it's all institutions that put in chargers as a discretionary decision, right? There's no grocery store or workplace that has to put chargers in to drive, make their business work. Unlike a fleet, if you're, delivering with electric vehicles, you've got to have charging work or your business is impacted. So all these commercial institutions that are putting all these chargers in are doing it because they're trying to attract people that they care about, that they want to come to that institution. And we're getting to a point where we're sophisticated enough now where we're able to start to quantify it. Europe, which is further ahead than we are in terms of electrification of the transportation system, we've got customers in Europe that offer charging at their stores and can tell you down to the minute and the penny how much longer drivers that are charging at the store stay and how much more they spend. And it's clearly driving their core business. I've talked to folks in the hospitality business, and they'll tell you, some of them will tell you that the number one amenity at a hotel above the spa, the pool, the local golf course is charging available. So using it to help someone drive their business, whether that's attract a tenant or a shopper or an employee that would come work for you and want to stay because they're an EV driver and they believe in climate change and they want you to support that and they're behind that mission. I think that's what's really going to help drive further adoption is turning it into a business case, rather than a moral imperative if you're a climate change believer or something that the government mandates.
Yeah, for me, just testing EVs and things like that, having them at retail locations and even hotels is such a big bonus for that, just lifestyle and just how you live your life day to day. So kind of, piggybacking on that, I know that you guys are coming out with a new DC fast charger, right? So talk to me about this new equipment. Is it going to be cheaper to install? Is it easier to install? What does it offer that would help both not only a customer like Jared and I, but also ChargePoint?
Yeah, there's some nuances, technological nuances to DC fast charging that can really create a lot of differentiation. And we've exploited some of those architectural changes in this new product to really create something that's better and different than anything else in the market. One of the big changes we've made is we've architected it in a way where you can directly integrate storage, battery storage, and solar. You don't need to go through a change from DC current to AC current to put it into a charging system. You can take it directly in as DC current, which is the way a battery or a solar panel generates electricity. This saves a lot of equipment and it saves a lot of electricity that doesn't get wasted turning into heat. The other thing we've done is we've architected it in a way that it takes up the minimum amount of space for the most amount of power. And when you talk about parking lots and real estate's money, and if you can use less space for your charging infrastructure, you've got more flexibility on how you want your vehicles to park and charge. Maybe you can even fit more EV chargers on a site. So energy density per square foot is a big metric in this industry, and this charger really maximizes that, along with this new architecture that allows direct integration of storage and solar and other clean generation technologies. Really makes it different than what's on the market today.
Yeah, storage is a whole other thing we can get into, but we don't have much time for that. But just real quick, we talk about those retail industrial build-outs cost a lot of money in some cases and require a lot of work. The home part is a very interesting one because people ask me all the time, how much does it cost to put a home charger in? What does it entail? Can I do this? And I know you guys have seen a little bump up in those sales too. So talk to me about home sales charging and sales there, but also what are some of the things people should keep in mind when they want to do something like that?
Yeah, so we've seen a pickup in home charger sales recently, probably as a result of these high gas prices and these low-cost used EVs coming onto the market. But home charging is an interesting use case. If you're in an apartment or a townhome or a condo complex versus a single-family home, how you get it done varies depending on how many stakeholders are involved. And then even in a single-family home, the nature of your home will determine how much it costs to get the electrician to install it. So we're really trying to create new benefits for home charger installation beyond I just have a charger at home to charge my vehicle, which is awesome because you wake up every day with a full tank of gas. But one of the big things we're trying to unlock is, number one, being able to install a home charger without having to upgrade your panel or your service. And we've got some really interesting technology that we're developing in collaboration with our partner Eaton that would allow a home to put a home charger in almost regardless of what their service is in terms of amperage to their home or what their panel looks like, and they can still make a charger work. The other thing we're trying to do is make technology available that allows the car to deliver energy back to the home. This is called vehicle to home or vehicle to grid. I had three power outages on Christmas Day this year. I wish I had my car giving my home power.
I never even thought about that. Hook your car up to your own house. Yeah.
It's coming. And it not only does it solve that use case, which is unfortunate but common here in North America, power outages, but also if you've got super expensive electricity at times of the day, you don't want to be charging then. You don't want to be using electricity for your home at that time of day, which may be the hottest part of the day. Maybe you disconnect from the grid and run your air conditioner off your car, when you bought energy cheap overnight or you got it off your solar panels. So there's a lot of innovation that's going to bring a lot of value to the home use case that I think will help drive EV adoption even further, because now we're kind of back where we started, which is EVs are more than just a better way to get around. They change the way the grid works. They change the way your life at home can work. It's got more effects, secondary effects, than a lot of people realize today that I think are really promising for the future of the industry.
The future is here. Rick Praz, thank you so much. And coming up, now that SpaceX is trading, it could soon be part of your 401k. We're going to tell you how and why next on Asking for a Trend. Hello and welcome to Asking for a Trend. It's been a big day here in the IPO market with SpaceX making its historic debut, the stock closing up nearly 20%. And let's go to AlphaSpace right now and check out the day's trading action. Here you can see opened up at 11:46 a.m., $8.4 billion traded at $150 per share, and it was kind of up and away. We gave back a little into the close here, but nevertheless, we've seen prices about $168.75. Not bad for a first day. And with SpaceX officially making its historic debut, a whole new world opens up for the standard retirement accounts. Yahoo Finance's Carrie Hannon joins us now to talk through it all. So, Carrie, it's great to see you on a Friday afternoon, especially a big day. Talk to us about what makes SpaceX different from other IPOs, should they be in our retirement accounts.
Well, right, Jared. So what has happened with this particular IPO is that the rules were relaxed in a couple of big index funds in order to sort of, ease these mega IPOs into the indexes. And so in terms of having to show a certain amount of profitability or trade for a certain period of time, they've been fast tracked. So the two big ones that we're talking about is the Russell 1000 and the Nasdaq 100. So those are index funds. Mm-hmm. So in your retirement account with your employer, your 401k, you hold those indexes as one of your investments, or you have another fund that tracks those indexes. It's very likely that the SpaceX shares can be popped right into those indexes in, a few days from now. So, it might be, I think the Russell is something like 2 weeks, or sorry, the Nasdaq 100 is roughly, 2 weeks of trading time before it will be in, but roughly 15 days. But again, the Russell 1000 will be a bit quicker. Now, who has not done that is the S&P 500, which what most of us have. I know I do. And they said, hey, no, we're not going that route. We're going to stick with our company needs to have been traded for at least a year, and they have to show 4 quarters of consecutive profits, which we don't see with SpaceX at this point.
Yeah, I remember it was a big deal when Tesla just joined. Well, Tesla joined the S&P 500, and they had to become profitable. And obviously, SpaceX not quite there yet. So we're talking about the timeline. All right, a couple of weeks, we're going to get it in the Russell 1000. Most people don't have exposure to that particular index. The Nasdaq 100, some people do. But what if you wanted to opt out? What are your options there?
Yeah, and I should also add, Jared, that there are stocks like the Vanguard Total Market Index also had fast-tracked rules, so they would also have that possibility. So the thing is, if you want to opt out, then what you need to do is go and look at those index funds or those total stock market funds that you have invested in your retirement account and look at what their holdings are. They update those frequently. You can see if, in fact, they put SpaceX in there. And if you don't like it, sell the fund. But the fact is, right now, it's a pretty small percentage. And in fact, it is diversification. We all talk about the need for diversification. So I don't think there's a need to panic at the moment to opt out. But down the road, it will become a larger portion of that index as more shares are available on the market, because these indexes, are designed to track the other one. So they'll have to they do need to buy these shares of these stocks. But again, it's not right now. And so I wouldn't freak out over it.
No, there's a tremendous amount of excitement today, admittedly FOMO. So I could imagine investors sitting at home saying, well, I need to be in on this. But most IPOs, they come back in price. And there's usually a much more attractive entry point a little bit down the road. So we talked about some of these index funds. What are other ways, if people are really excited about SpaceX or some of these other opportunities, what's the beginning step there to get one of these in your 401k?
Well, yeah, I think you do your homework. Remember, like you just said, Jared, these are risky, right? So if you have too much exposure, and it's going to be some time before this price settles down. Yes, when zooming up today, but IPOs do that, and then they tend to settle down to a more reasonable as you move forward. So do your homework and see what indexes or what investments you have in your 401k that has included it. You might need to wait, a week or two in order to do that. And then you might want to consider hanging on to those and do your research of who else has added that and see if maybe that's something you want to do. And again, we're going to see this roll out, though it will be just like you said about Tesla. It's in a lot of our index funds right now, and so will SpaceX be.
All right. A lot of sage investment advice there, and it's always beautiful to talk to you on a Friday afternoon. Thank you, Carrie.
Take care.
And one of SpaceX's biggest ambitions is to bring AI data centers into space. Yahoo Finance's Julie Hyman spoke earlier to James West, Melius Research Head of Energy and Power Research, on the future of space-based data centers and the power needs of the rapid AI build-out back here on Earth. Take a listen.
I think over time, certainly space becomes a market for power. You do have 24/7 solar power in space. We use that already for the space programs, for the satellite programs. And so it's a known quantity and a known entity. And we only use probably less than 1% of the sun's solar power on Earth. And so we can use a lot more when we're in space. But really the biggest constraint, as you know, to data centers and AI on Earth is power.
It is. But at the same time, I guess, how serious and severe do you think the constraints are terrestrially right now?
So I think the constraints are very serious. I think every single hyperscaler will tell you that their biggest number one constraint today is power. And so the speed to power is an issue. The ability to get power is an issue. AI models are being held up by the lack of power on Earth. We have a grid that was built, particularly in the U.S., which is a miracle of the modern economy, but the grid was built for slow, incremental additions of power, not this surge in power that we're seeing right now.
And so, in your view, how adequately is it being addressed? How urgently is it being addressed? is it?
So what you're seeing right now is the private market is going around kind of the traditional monopoly utilities, so the independent power producers and other entities like KKR. You saw an announcement yesterday of a new company they started called Helix, which is going to provide data centers and power. They're going to put co-located power in place. So think about natural gas-fired power, think about solar and storage power, whatever it takes to get this done. SMRs as well are part of that, and they did that with Vistra Energy. And so there's going to be this private market push, but I also think there should be a push within the regulated utilities to cause further deregulation, something that started really in the 70s and got encouraged in the 90s and early 2000s and led to the IPPs. We need more IPPs. These are the best companies to attack this. They're the fastest movers. They're the ones that can most aggressively address the power consumption needs. But then the whole supply chain's got to surge and lever up and be able to supply the turbines, the transmissions, the switch gears, everything else.
And what are the implications for residential rates then, if we see further deregulation?
Right. So I think right now what we're seeing is a parallel market being created for large load centers. I think data centers and advanced manufacturing and the retail market trying to be protected. None of the data center or hyperscalers want to impact the retail market, the households. They do not want to see power surges, power price increases there. They want to make sure that the new generation that's built, which is going to be at a much higher price point, is paid for by the data centers and the hyperscalers and not impacting ratepayers.
We know that the sort of power picture across the U.S. has become more dependent on things like solar and natural gas. Wind is being taken out of the equation more and more often because President Trump doesn't like it. Is that going to be a problem going forward if we're trying to really ramp up?
Well, we just started the largest wind farm in the United States this month, so it's not like wind has stopped. Now, new permitting has certainly slowed. This administration is not really behind the wind market, and there's some issues around national security and wind that the Department of War has brought up. But I think that overall, solar plus storage, as long as storage, we can get to long duration storage, is adequate. Natural gas is very reliable. It's abundant here in the U.S. 75% of what's being built today on new generation and has permits is natural gas. And we have a ton of natural gas in this country and in lots of pockets around the world too, but especially in this country to be able to provide that power.
James, a lot of these hyperscalers are making these sort of behind-the-meter agreements with those independent power producers. There are some jurisdictions that are trying to mandate that, right, as a condition of hooking up here. Do you think the market's going to kind of take care of it, and that is going to be the standard for these types of arrangements?
What we're seeing right now is FERC, with the regulatory capabilities on the various markets, is telling them that you need to have a way to build data centers at the same time as you build behind the meter power, because your grid connection may not come for 5 to 7 years. So let them build that power, connect it at some point when you can. Hopefully then you can sell power back and forth to the grid and create more stability for the grid. But for right now, because the interconnection queues are so long, behind the meter is absolutely the right solution.
Coming up, summer is here. We look into the price of throw a barbecue in your backyard and how that has changed in the last year. That's up next on Asking for a Trend. Summer grilling season is heating up, but so are prices at the grocery store. According to new data from Wells Fargo, the average backyard barbecue for 10 people is going to cost $161 this year. For more, we're bringing in Robin Wenzel, head of the Wells Fargo Agri-Food Institute. Robin, thank you for joining us here. Let's start with, you had me at barbecue. I love barbecues. And one of the stats you throw out is that people are kind of gravitating towards these events like home events as opposed to getaways. And $161 or $200, that is a lot cheaper than a trip to wherever. So talk to us about changing consumers here.
Sure is. So we think with more people opting to stay home or closer to home this summer, you may have an opportunity to really fill up your backyard with a lot of guests. And so we took a look at our summer barbecue report to help people plan and prepare for that and what the cost would be. And as you mentioned, we're seeing about, for a party of 10, it's about $161, $16 per person. And as you said, it's a 2.4% increase, which really is in line with what we're seeing with food prices from the Bureau of Labor Statistics, May numbers.
And talk to us about the menu options that consumers have and the changing tastes that we have. Any swap outs there? Is it ribs? Are we talking burgers? Are people maybe changing one ingredient for another because of price?
I think for those hosts that are really focused on budget, hamburgers traditionally are a popular option at backyard barbecues, but with hamburger meat up 14%, they may want to look to other proteins. We are seeing chicken breasts up only 3%, so that's a great option. It's also a healthy, lean protein that's pretty popular right now with many consumers. Pork ribs, though, easy to make for a crowd, they're also up 3%, so that would be another good option.
Well, and let's talk too about the barbecue budget. Are there any trends you're seeing in alcohol, cocktails, and other complements to the standard barbecue fare?
So beer and wine really are only up about 1% year over year. So we're not seeing a big increase there. However, it does constitute a pretty big portion of the budget. So it's always wise to ask people to bring their favorite beverage. That can save hosts some money. The popularity of the single can, the ready to drinks is growing. And we're seeing everything from cocktails to functional beverages. Those we're seeing bigger increases in pricing. So we think, again, if you can keep it to the sparkling water, sodas, and ask guests to help chip in with cost. That'll help you save some money.
Now, when we talk barbecue, sometimes that can entail a lot of work, and it's hot out there. Are people gravitating more towards do-it-yourself, or are they getting into the prepared foods and making it a little bit easier?
So prepared foods are always a great option, super convenient. The grocery stores are really leaning in and providing a lot of options, whether it's in the bakery, salads, proteins. So what we're seeing with sides is sides are up a bit. So prepared potato salad up about 4%, cornbread up as well. So there may be an opportunity to save money by cooking from scratch with some of your favorite sides. When it comes to dessert, though, we do see a different story. Really, cookies, ice cream, both are up just 1%, apple pie, 4%. So if you want to save some time, maybe go visit the bakery, but make some other sides homemade from scratch.
Well, I've been told I need to ask you about screw worms here. They've been getting a lot of attention. It's not pleasant to think about, but how is this affecting the foods that people are selecting and also the prices?
Yeah, so it is an evolving situation. As we know, I think the latest count I heard is we're up to about 8 cases in the U.S. We're really not seeing any impact at this time. What we're seeing drive beef prices is just basic, supply and demand. So supplies are at record lows, prices are up. Really nothing filtering in yet from the screw worm.
And who's making out here in terms of the businesses? Is it grocery stores? Is it warehouse clubs, packaged food companies? Where are the investor opportunities there?
I think, with a lot of the big retailers out there that can, consumers can buy in bulk, that's the greatest opportunity for some of the savings as well as convenience. They tend to be pretty price competitive on a lot of the prepared foods. So we see that as a, growing interest from consumers to try to go buy bulk, save, and then just look for, any other specials that they have out there as we start approaching some of the bigger holidays this summer, like 4th of July.
All right, seals the deal. I am definitely having a barbecue this weekend. Appreciate your time here, Robin. Thank you.
Great seeing you. Thank you.
And stick around, much more asking for a trend still to come. Time now for what to watch for the week of June 15th. With SpaceX dominating the headlines this week, investors are now looking to see if momentum can hold into next week. Stock closing up nearly 20%, and investors will be watching the stock closely on Monday for its first full day of trading. And turning to the Federal Reserve, the Fed is making its next interest rate move on Wednesday, but this time with a new face at the helm. Fed Chair Kevin Warsh holding his first post-decision press conference on Wednesday. Yahoo Finance's coverage on Fed Day will begin at 2 p.m. Eastern. And taking a look at earnings, Accenture is announcing quarterly results on Thursday. Analysts keeping a close eye on whether AI spending is actually driving new business or simply shifting dollars around with an existing IT budget. And finally, Kroger reporting first quarter earnings on Thursday. Analysts expecting same-store sales growth to come in at the low end of the company's full-year outlook, with pressure from lower egg prices and pharmacy headwinds. That's a wrap on today's show. Thank you for watching.